the street of $9.1 billion, and that stock, as a result, is up by about 3.5%.
All right, coming up, a check on the power of the consumer. Exclusive results of the CNBC Retail Monitor is next. And a programming note, Live Golf CEO Scott O'Neill will be appearing on Halftime Report at 12:30 p.m. Eastern Time. Squawk Box returns in just a moment.
Welcome back to Squawk Box this morning. A live shot there of the White House. We got the results of the latest CNBC NRF Retail Monitor. Our friend Steve Leisman, senior economics reporter, has the details. Good morning.
Good morning, Andrew. The CNBC NRF Retail Monitor showing a 3-month surge in spending at gas stations, but surprisingly little impact on how much Americans are shelling out in other parts of the economy. In fact, we're measuring an acceleration there. The Retail Monitor is powered by real credit card spending data from Affinity Solutions. Shows retail spending ex auto and gas rising 0.4% in May. That's up from 0.3%, and for a year-on-year amount of 7.2%, up from 5.7%. Core retail, we take out restaurants for that, up 0.4%, also a tick better than the prior month for a 7% year-over-year gain. The data show that year-over-year, gas station sales are up nearly 35%. But sales ex-auto and gas up 7%. That's about a 1 percentage point increase from before the war. Retail sales, according to the NRF, maintained momentum in May, driven by a resilient labor market and consumers' continued willingness to spend on retail goods despite pressure from elevated gas prices, tariffs, and the conflict in the Middle East. Larger than normal tax refunds, they could be helping, a support that could be running out, but there was no sign of that this month, with the Affinity data showing gains in discretionary sectors, the kind of sectors that consumers could reduce spending in. Gas stations, you can see it there. But those other numbers, digital products, clothing and accessories, restaurant and bars, only declines in the 2 of the 12 sectors that we have of furniture and building and garden supplies. Those are the only 2 sectors that we saw declines in, 0.4% for building supplies. The data, not adjusted for inflation, so that could be boosting sales figures, and it doesn't show, of course, that lower income Americans, they're deeply affected by these higher gas prices. It does show, though, overall consumer spending hanging in there despite the pain at the pump, Andrew.
That's right. There's no panic.
Steve, if you were Kevin Warsh looking at these numbers, what would you be thinking about for next week?
Well, I'd be wondering where the strength is coming from. I would really want to understand. We get some good data, by the way, on Thursday from Bank of America. They have sort of a competing product when it comes to looking at their actual spending data from their credit cards, but they break it down by income level, something that we can't do just yet. And I would want to know, we've been showing that low-income consumers have had a decline elsewhere, have been really struggling. I'd want to understand that. I think Kevin's going to hang loose for the first meeting. I think he's going to try to, he has a lot of ideas, a lot of different ideas about how to run monetary policy, but I don't think you go in with guns blazing when it comes to changing things at the Fed. You need to kind of socialize things internally. It's hard for me, Andrew, to look at the lineup there of voters this year, even non-voters, and see who is a friend right now of cutting interest rates. The debate at the Fed, as far as I can tell, is to hold or even to hike. And I believe the Fed almost certainly next week, and we'll talk about this extensively. And of course, we have the inflation numbers tomorrow that will help us understand what the Fed is thinking. I think the Fed is going to lose that bias, that subtle bias, towards easing and go to a more neutral stance. And we'll see about the commentary that comes out of it and whether or not there's more hawkish commentary.
And by the way, Steve, is your expectation there's going to be as much communication as there had been under Powell? It's going to shift in terms of what those press conferences ultimately look like?
I think that's a very good and important question. And one of the things we're trying to understand is where Kevin Warsh comes down on all of this. I think he believes almost certainly that the Fed over-communicates. The trouble is that not all of the Fed's communication is within Kevin Warsh's control. The Fed sat down, I guess it was a couple years ago, and had a conversation or began a conversation about communications, but it never ended up anywhere. Fed presidents are free to talk as far as I understand. Now, they could sign on to an agreement to talk less. But the question you really want to ask yourself is it a better world if the Fed talks less or a worse world? And I'm sort of in favor of the more talking. I think the market processes it just fine and understands where the Fed is going. And people complain about it, but remember the older days, the older days when they didn't know what the Fed was going to do, and that was worse.
Okay. Steve Leisman, thank you, sir. Appreciate it.
Pleasure.
But we
Joe?
did know, Steve. But we did know. We had the briefcase indicator. I think you forget that. Depending on Alan Greenspan, you could tell if it was a thick briefcase was going to hike, right? Or was going to make a move or cut. There was going to be a cheat. I did. I know. Coming up, a checkup on the GOP agenda. Senate Majority Leader John Thune's going to join us for a wide-ranging interview at 8:40 a.m. Eastern Time. Squawk Box returns in just a moment.
Good.
Welcome back to Squawk Box. A federal judge blocking President Trump's attempt to impose a $100,000 fee on applications for H-1B visas, which are commonly used by big tech companies to bring highly skilled workers to the U.S. The judge agreeing with states suing the Trump administration that the six-figure fee amounts to a tax. He cited the Supreme Court's February opinion striking down President Trump's so-called reciprocal tariffs as part of this, in the White House saying that it plans to appeal. When we come back right here on Squawk Box, OpenAI joining Anthropic on the path to the public markets. AI investor Michael Furtick is going to tell us more about the race to that IPO and what it means for other companies currently on the sidelines. Don't go anywhere. Squawk Box returns right after this. Welcome back to Squawk Box. OpenAI has joined the IPO race with its confidential S-1 filing. Joining us right now is an AI investor and entrepreneur, Michael Furtick, founder of Verdict Capital. Good morning to you, and help us maybe with this verdict, if you will, given that it's not, I mean, maybe it shouldn't be news that OpenAI wants to go public, but obviously they've now filed. Is your bet that this fall we're going to see just a slew of IPOs, that everybody's going to take advantage of this window? Do you imagine that the window closes before them, gets even wide open? What do you see here?
I can tell you what I'm rooting for. I'm rooting for a wide open window with many IPOs. There's a big backlog of companies that have been curing for many years, and the private valuations are getting more and more heady. In the case of OpenAI, it's kind of hard to avoid a comparison between OpenAI and Anthropic. And as I sit back and take a look at it sort of phenomenologically, it seems to me it's like a case of Willy Wonka versus Henry Ford. Willy Wonka being Sam Altman and Dario being Henry Ford. OpenAI seems to be the magic man doing everything, many products, buying many different companies. Physical AI with this Pendant company they bought from Johnny Ive. Sora, which was the video, DALL-E, which was the image. They shut down Sora. Whereas whereas Anthropic seems to be much more laser focused, always on the enterprise, on software coding in their M&A, and the results seem to be favoring Anthropic's approach. 40 billion of revenue, or so we think, from the leaks and so forth, versus 25 billion from OpenAI. Profitable, perhaps, this quarter, Anthropic, versus losing maybe $1 billion, $2 billion a month in the case of OpenAI. So I think we're seeing a moment where now OpenAI is trying to react to, probably, Anthropic's filing. And the feeling I get, the worrisome feeling I get, based on what I'm reading, I'm not sure OpenAI really means it yet. What do I mean by that? I think they have to get fighting fit. They have to get a little bit more fighting fit to prepare for an IPO. They've raised 200 billion versus Anthropic's 125 billion. And the losses keep mounting with no really visible end in sight. Even Sam today, or yesterday, forgive me, said something like, it's going to be a while till we actually go public, so prepare yourself. So I'm not really sure they mean it.
Do you own stakes in either of these?
Maybe accidentally, but not on purpose.
Yeah.
Thank you. Yeah, to my knowledge, no.
Yeah.
Yeah, thank you. Thanks for asking that. I should have clarified, but no, I'm not an investor in either. I am an investor in a company called Anysphere, which has been reported to be sold to SpaceX. So we're sort of waiting for that phenomenon to unfold. And of course, there's a lot of cross ownership among these companies in the background. But I and my fund, no, indeed.
Michael, we do have SpaceX, the SpaceX IPO on Friday, and I'm curious how you're thinking about that as a harbinger for everything. I mean, I don't know if you'll agree with what I'm about to say, but I think if it works, the window gets wide open. If it doesn't work or is shaky, the window gets maybe a lot smaller.
Well, you know what I say in these moments, and Joe roots for me. God bless America every single time.
Ooh,
Rooting for this IPO. I am
that
rooting
hurts.
for Elon Musk. I am rooting for the IPOs. I'm rooting for the OpenAIs and the Anthropics. I'm rooting for all of it because a few reasons. One, America has to stay ahead in all these races. Number two, the capital formation has been heavily weighted towards the private markets, and it's time for the public markets and the retail investors and Americans every day through pension funds or whatever to start getting their liquidity. Also in the field of private markets.
Exactly.
It's incredible how much illiquidity has been tied up for so long in some of these companies. I'm aware that a couple of the major
7
university
o'clock.
endowments,
I
meaning
gotta
the money that the universities use to sustain themselves, have up to 20% of their entire holding, their entire net worth tied up just in SpaceX. And think about that, not real estate, not the public markets, not the Qs, not the S&P, not energy, just SpaceX. So
Liar.
I'm hoping that we have a very successful IPO. I'm not a shareholder. I hope there is a very successful IPO in SpaceX. I hope it is the water over the dam for the next year of just a gushing torrent of liquidity. I hope that it does encourage the companies that have been getting ready to file. And I hope that also it works out for the investors at the IPO, but also in the ensuing year or two, because this will give a boost if it works to the Qs. It'll give a boost if it works to the S&P, the concentration of value, and will finally bring liquidity back to all these investors who've been so illiquid for so long. And that'll create another cycle, and another cycle. So we could be entering a super cycle.
Let me ask you about that, though. When you think about the investor class that needs to or will want to sell into this IPO, some of whom have a lockup, some don't. As you said, more retail investors in this IPO than ever before. Do you think that the way it's structured, both in terms of weighting towards retail investors in a way that, as I said, we haven't seen before, the QQQ obviously creating a buying mechanism within 5 days of the offering. Do you look at all of that and say that this is set up as well as could possibly be set up? Would you want to set it up differently?
No.
Well, you know, I'm not a professional public securities investor or analyst, but I will say, from all I'm reading, the way that the SpaceX IPO has been set up has been so well optimized for their success. I understand the float is relatively small. The pre-selling has been extraordinary. This pre-contractual agreement or this pre-baked agreement to become part of the index is quite exceptional and quite incredible. And so, look, I'm hoping it works. And by the way, the ambition, just the scale of the ambition of SpaceX is GDP worthy and national worthy by anyone's measurement, right? You can cavil, you can throw rocks, you can say there was someone on the station a day ago saying, well, you know, 80% of the projected revenue from SpaceX is from AI. Okay, you want to throw a rock? at the greatest Einstein we got alive, the guy you should be happy to be alive next to during his lifetime, Elon Musk. You're allowed to do that. But meanwhile, you gotta just be so extraordinarily impressed with the scale of their mission and also what they're pulling off. These guys, a cooling agent that has never been invented before in order to be able to land a rocket backwards, upside down, on a drone ship in the ocean on Tuesday, so that they can then IPO a year or two later. That's who these people are. And if you want to throw rocks at it, you know, your life, even if you're rich. I believe that this is the harbinger not just of a great wealth to come, but also
crowd's going wild here at the sports arena.
Of wealth creators who are all
Sorgerson just had his lunch ate to him.
doing it in America. And so we should
How's
be
it
looking
taste there?
for it, and we should also be
He didn't
allowing
like it.
the American retail investor to enjoy part of this wealth. There's a great concentration of wealth in the founders, and that's to be expected. But if we can broaden that sharing of the wealth through the capital markets, I think everybody wins, and everybody continues to have the right to root for it, which is what we want.
Whoa. Ouch.
Michael Furtick, from your lips, another great American. Thanks for coming on this morning.
Whoa.
Thank you very much. I'm all the way here in New York, and you're in London. You know, like I'm schlepping it over here in New York. I'm in the studio. Maybe next time I'll see you in person.
You're the one who's always in Europe.
That's true.
You're
I used
always
to be.
in Europe.
I used
Here
to
we
be,
are.
But I'm very glad to see Joe and Becky here. It's nice to be back.
It's nice to see you.
Thank you for coming in, Michael. All right, folks, it is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among our top stories this morning, President Trump says that a deal to end the war in Iran could come within days. He says the agreement would
He
block
said that 2 days
nuclear
ago
weapons
and a
reopen
week
the
ago.
Strait of Hormuz. Oil prices this morning are lower. WTI off by about 2% to $89.49. NVIDIA CEO Jensen Huang will not testify before the Senate Banking Committee this week. Lawmakers are seeking answers about NVIDIA's China's business and U.S. AI chip exports. In a letter to Senator Elizabeth Warren, who issued that invitation, Huang said simply that he would not be able to attend. And the Spurs beating the Knicks 115-111 in Game 3 of the NBA Finals. President Trump attended the game as Victor Wembanyama scored 32 points in the San Antonio win. New York now leads that series 2-1.
And the futures this morning are indicated higher. They're green across the board. Let's take a quick look at treasuries, which are kind of in a new range, aren't they? Above 4.5% on the 10-year. Let's get to Dom Chu with a look at this morning's pre-market movers. Hey, Dom.
All right, good morning, Joe, Becky, Andrew. We're going to start things off with another check on shares of drug makers GSK and Nuvalent. GSK shares are just turning positive right now by 0.25%. Nuvalent's up about 39%. This is on news that the UK drug giant is buying Nuvalent for $10.5 billion to bolster its cancer pipeline. GSK says the all-cash deal values Nuvalent at just around $124 a share. It's Glasgow's or GSK's biggest buy in more than a decade, and its second largest buy ever, so keep an eye on that. Shares of Nuvalent up about 39%. Next up, you got shares of Apple, which are down just about 2/3%. Following a 2% slide yesterday, the tech giant rolling out its long-delayed AI upgrade to Siri at its Worldwide Developers Conference. Apple says the new Siri is a little bit more conversational with the ability to analyze what's on a user's screen and then locate details like an address mentioned in an old message, even if it was never saved. So Apple shares on WWDC down about 2/3%. And we're going to cap things off with shares of Oracle, which are higher by just about 1.5% after Bank of America raised its target price on that stock to $240 a share from $200. That's a 13% implied upside from yesterday's closing price. The analysts over there say that underlying demand trends remain robust across its cloud infrastructure, its OCI business, and of course database workloads as well. So Oracle shares catching a bit of a bid on that more positive analyst commentary. Now, for more on that and other calls of the day, head over to cnbc.com/pro. Subscribers can get all the access to detail and analysis around those big calls and stories each day, Joe. So Oracle shares in focus, and I'll send things back over to you guys.
All right, very good. Thanks, Dom.
You got it.
See you, we'll see you probably tomorrow.
Likely tomorrow.
Okay.
All right, for more on the markets, we want to bring in Mona Mahajan. She is the head of investment strategy at Edward Jones. And Mona, you've had a lot to strategize about recently. That big pullback in the NASDAQ, pullback of more than 4%. It was dragged down by the semiconductor index with a drop of more than 10% on that day. That tends to make you sit up and get your attention.
Yeah, you know, look, that was a unnerving Friday, unnerving way to end the week. But look, that semiconductor index, and if you look at the stocks broadly, was up over 80% heading into Friday. So even with that pullback, even with the down week, we were up over 70% year to date. And so I think those investors that had stuck with this trade were still seeing relatively healthy gains. Now, the other part of the story on Friday was, of course, the labor market came in stronger than expected. That puts some pressure on the Fed. It's going to be hard for them to make the case for any sort of rate cut anytime soon. But all that being said, we like to see the labor market steadying. We think that's good for consumption. And by the way, we did not see any signs of a wage price inflation spiral on that note either.
Which tells you what? That don't worry about a big pullback in a day, that you're still sticking with those semiconductor names and other technology?
Yeah, you know, I'd say broadly, we still are in the camp that we could get market volatility. Look, we are up on the S&P broadly over 20% from the March 30th lows. It's been a really nice run. We know 1 to 3 corrections are the norm in any given year, but do we see the case yet for a bear market, a deeper prolonged pullback or drawdown? Probably not, because usually that occurs if the Fed's hiking rates aggressively or the economy is showing signs of a recession. And so we don't see either of those on the horizon. So we still think pullbacks here are normal and could provide some opportunities.
But provide opportunities, meaning you think people should buy the dips?
Yeah, you know, I think we would encourage people to, 1, make sure you're rebalancing, 2, make sure you're diversified. So if you're very heavy in tech and AI, that sector in particular and parts of that sector have run so far, so fast, you could start to see more volatility there. So we want to make sure we're exposed to both tech and non-tech parts of the markets, that broadening.
You know, that's what comes down to it. Investor sentiment can change pretty quickly. We saw that on Friday. It's just a reminder of what happens. Yeah. But do those valuations make sense to you? I mean, do you believe the future earnings potential of these companies? Because if you do, most of them aren't really all that out of whack.
Yeah. You know, we think the CapEx story, the data center, the AI story is real. We're seeing companies invest heavily. We're seeing companies come to debt markets and public markets to raise equity to fund some of this CapEx spending. What we'd say is we're not seeing the same valuations that we saw back in '99 and 2000 prior to the tech bubble. So we think there is an earnings foundation to this story, and that's why we're not giving up on it. But we know over time when we see new innovations come to the market, usually it starts with the fundamentals, the semiconductors, infrastructure players of AI, but over time it should spread to those that will gain from the productivity gains as well.
And your biggest concern is whether all of the capital that's being invested right now, significant amounts of capital in AI, in the data centers, if that they get attractive returns.
Yeah, you know, we want to make sure, historically what happens is there's 1 or 2 winners in every market. And think about Google in search, or NVIDIA in semiconductors, or Apple in the phone space. And so over time, could there be 1 or 2 winners of AI that emerge? Absolutely. And so the capital that's being invested broadly, some of them will see a really strong gain, some of that will not. So we want to be mindful.
John was talking about that earlier. If you find 1 or 2 winners, why not have somebody who consolidates all of it?
I mean, with what we're seeing with the pushback and all this computing power. I think if we had 10 players and they all had to totally build out all the computing power, that it just seems like you're using too much energy. And sooner or later, if you could consolidate it all, because it is unbelievable how much, I mean, they have to scrape everything on the planet to get an answer for you, and it's costly. And
and not only this planet, we might start looking at other planets to start funding some of this data center and energy capacity. But I think you have a good point there. You know, this country is known for innovation, and I think they will find efficiencies in funding and the energy costs of energy side of this equation.
Will force them to do that.
Yep, and the only thing we have to worry about is will government regulation get involved? But luckily, we have historically had more hands-off economies or hand-off government than others.
Mona, thanks for coming.
Thank you.
Andrew?
Okay, coming up in just a moment, Palantir co-founder and 8VC founding partner Joe Lonsdale on the race for AI dominance, the upcoming SpaceX IPO, and so much more. And then later, Senate Majority Leader John Thune is our very special guest. You don't want to miss any of it. Squawk Box is coming right back after this. Welcome back to Squawk Box this morning. Join us right now with more on the upcoming SpaceX IPO and the AI race. 8VC founding partner Joe Lonsdale. He is a Palantir co-founder. Good morning to you, Joe. We're all, I think there's a lot of excitement about what's going to happen on Friday. There's also questions, though, about the structure of it, the valuation of it, the way it's being distributed in terms of more retail, the NASDAQ of it all. What is your expectation for what we're going to see come Friday and come the next coming weeks?
Well, listen, it's an exciting week, Andrew, and I think it's really smart that they're giving it to a bunch of retail as well. I think this is an industrial revolution that everyone in our country is a part of, and I think you've seen, obviously, coming from Palantir and the retail support there, and what Elon's done before. This is going to be a strong IPO.
Is your sense that we're going to see like a massive pop out of the gate?
Oh gosh.
Do you think that we're going to, I mean, it feels like everything, but the reason I'm asking is it feels like so many of the other IPOs that could come this fall or even later this summer are so dependent on whatever happens in the immediate aftermath of this, no?
You know, it's interesting. There probably is some effect where crypto probably, some of the liquidity probably is going into SpaceX and Anthropic and all these other things coming up, right? So I guess there's, in some sense, in the short term, there's probably some money shifting around, and people are really excited. I think the key thing here, I mean, this is a critical company in the middle of the biggest industrial revolution we've ever had. Elon set really clear goals for himself where he gets extra upside if he achieves those goals financially. He's the kind of guy who doesn't miss his goals. So I think you look at those, I think you make your bets over a 3 to 5 year period. I'm not a short-term trader. I can't tell you what happens in the near term.
We had Steve Eisman on the show earlier this week. He is not a buyer of this stock. He believes the valuation doesn't make sense. Looks at the TAM, thinks so much of it relates to AI, and doesn't think that Elon. Not that Elon's not in the game, but for whatever reason, doesn't believe that Elon is going to win that AI game. Do you have a different view?
Yeah, I mean, listen, there are trillions of dollars in our economy being invested in the infrastructure for AI right now, right? Literally, I think it's like $5 trillion over the next 5 years. Like the tiny thing Elon spent, I think I'm not allowed to say exactly what he spent money on. I was just talking to him about it, but basically, it's like the payback is well under a year, is what I'll tell you, for the $26 billion he's getting paid on the part he spent that money on. I mean, he's the kind of guy who's the best at hardware in the world at a time when trillions of dollars are going into this area. And by the way, every single time that there's more dumb regulations, that there's more data centers that China is spending money to convince us, along with the far left, not to do, that just helps Elon, because he is going to do it in space at massive scale, and he's shown how it's going to work. So, I mean, he's really set this up in a way where he's just right in the key part of the AI wave. It's crazy to think he's not going to win.
Okay, so if you're right, and maybe you'll agree or disagree with this, I've been betting that he will relatively, I think quickly, but maybe you think differently, try to buy Tesla with SpaceX and SpaceX stock.
That's above my pay grade, Andrew. I think that SpaceX is set up to be key AI infrastructure. It's absolutely the best in the world at what he does, both on the hardware he built at XAI. I mean, it's amazing what people are paying for that. And here's the other intuition on that that's crazy. Like, they wanted longer contracts, right? So they're willing to pay way more than what it costs them per year, given his ability to build these things. And he's keeping it shorter because he thinks it's going to be worth more to him for what he's going to do. So, I mean, I think, listen, betting against this guy is not very smart to me.
It has not been very smart. What do you make of the NASDAQ changing its rules? There's been lots of questions about whether this is good for price discovery, bad for price discovery. Obviously, it creates an opportunity for the NASDAQ, creates an opportunity to get into the index for people who want to buy SpaceX as part of an index as opposed to buying it directly, but also creates all sorts of questions about creating sort of an automatic buyer, at least for a period of time.
Listen, I don't think the government should be buying into these things, which is a separate topic, but I do think the indices should be buying into these things. I think everyone who's long America should be long SpaceX. They should be long Anthropic as soon as they can be. They should be long these key companies. I think it's going to be a really good thing to get a lot more of these things into the index. I still think we're very early in what this company is going to be worth, so that the market, whether or not it's expensive now, it's going to look really cheap in 5 or 10 years, and I think that's what matters here.
OpenAI, if you could buy SpaceX, Anthropic, or OpenAI, which would you buy?
I have bought SpaceX and Anthropic, actually. I'll tell you that. I think those are the two strongest right now, by far. And listen, we're rooting for OpenAI not to implode. So I think hopefully it stays strong too.
Well, do you have fear it's going to implode?
I don't want to spread fears. I think that the other two in the strongest position by far. OpenAI was probably doing too much and lost some talent, but it's still a very impressive company, and I think the coding stuff is quite strong, and I think they're going to figure it out. But I think Anthropic clearly has the momentum behind it and is the strongest in terms of some of those things. I think the infrastructure SpaceX represents is just bidding on Elon is obviously the thing to do. So I think those are the strongest companies by far.
You mentioned the idea of the government taking stakes in these businesses. There has been a lot of chatter recently, and potentially even that Sam Altman has been talking about this idea in Washington. We've also heard it from people like Bernie Sanders and others. What do you make of that, and how do you think it would work or wouldn't work?
Yeah, I think Sam talking about that's coming from a position of weakness. I definitely don't think the government should do this, Andrew. I think it comes from a good place for some people. I think some people want the American people to be part of the AI boom and to feel it. And listen, I think they are going to be part of it in so many different ways. I don't think the right way is to directly take a position in OpenAI. Helping build more power, which is what we need in this country, helping accelerate permitting. If we want to build 1,000 nuclear power plants and do something really big there, if we want to, basically get rid of all these barriers still, which I think the administration is doing a pretty good job on, but could do a lot more better job on. If we want to bring down the cost of healthcare by fixing things there, there's things the administration can do that we all share the benefit of AI. I don't think the government should be taking a position and making these things too big to fail.
What do you make of just the zeitgeist right now? There's both an excitement about AI in the marketplace, clearly, around these companies and the stock itself, but there seems to be a genuine fear, especially among young people. We saw it with the commencement addresses and the booing and all of this, just about what this technology ultimately portends, and whether, I don't know if you think it's a communication story, I don't know if you think ultimately it does portend job losses for them, but I don't think we've seen such a sort of disconnect between both the excitement on one end and then maybe even a political question, because it could have a policy or political implication down the line.
Listen, I think the industry has done a terrible job communicating what's coming. I think this is an industrial revolution that is raising productivity in a positive some way. If you see what's happened the last 4 or 5 of these, everyone benefits. The average person is going to get a lot wealthier. It's going to augment workers. I mean, the last 3 jobs reports, you've seen this, they've just been revising up. There's, we're spending trillions of dollars in ways that it's really good for blue collar workers. There's definitely going to be some disruption, Andrew, but I think that overall, this is just such a positive thing. America has about 80% of this AI spend, and we're dominating right now.
So the companies that are talking about layoffs and blaming AI for doing it, you think that that's just either they overhired or they're lying about what they're doing?
There's a lot. Yeah, I shared this, and Mark Andreessen shared on X when I said it yesterday. That's true. That there's very clearly a lot of people who are using AI as the excuse that they massively overhired or they're not hitting their targets. I think if you're a CEO right now in 2026 and you have to do layoffs, maybe because your revenue is not hitting or because you hired the wrong people, AI is the great excuse, right? And that's what they're going to use.
You got any suggestions for an FDA commissioner, or what type of FDA commissioner?
You need somebody bold, Joe. This is, by the way, this is one of the best things about AI. It's going to save a lot of lives. It's going to cure a lot of diseases. All of us have people in our lives who are close to us who've had trouble with different types of disease. You're going to save thousands of kids. You're going to save millions of kids, millions of older adults. You have to be bold enough to push the bureaucracy.
Did we have that before with Makari?
I think he was good at some things. I think there's multiple people in there that need to be fired and replaced. And I think that you need a very clear mandate from the president, from the administration, that we are going to, like China takes 90 days at most to approve a new drug. We should not take 700 days, to allow you to even start phase 1 testing. It takes 700 days here.
Funding a lot too. What about RFK Jr.? Do you have confidence in?
I think he wants to be bold and push things in the right direction. He needs a partner who's in charge there, and they need the mandate to go really, really fast. We should be allowing trials to be started by our respected institutions. There's no reason MSK here, MD Anderson, tens of other ones shouldn't be allowed with an ethics panel to just go ahead and do their own trials. We have to go faster, and we have to make it safe and save people. And there's ways of doing that. You shouldn't do $100 million requirements for an N of 1 that's going to save a child. You should have reasonable GMP requirements. But there's so many things.
Not just N of 1s. I mean, part of the problem under Marty Makary was this idea of double-blind testing needing to be there even for small patient populations instead of relying on natural history.
There are things that were very clearly ethical that people underneath him were being really, really slow on delaying for years. When you delay something for years that works, you're killing people. But this is the promise of AI is we are going to cure a lot of diseases.
Vinay Prasad?
Yeah, I think from by all reports and everything he was doing, and listen, you shouldn't just approve everything. You have to be reasonable, but you want to be bold and you want to actually let us make it worth it for US to invest in biotech. We can put tens of billions more into biotech thanks to AI if they allow us. So listen, the government has to get out of the way. These administrative, craziness like that has to be stopped, and that's going to let AI do even better.
Hey, Joe, before we let you go on AI, one of the things that you were talking about Anthropic earlier, and I was going to mention, what do you make of the idea that Anthropic is saying that maybe we need to slow down? Maybe we need to, it's actually very similar to what Elon had said back in 2023 when he signed that letter quite famously. But it's I don't know if it's funny or ironic, but it's happening at the same time, obviously, as the company is, trying to go public.
The company's definitely not slowing down. It's definitely accelerating, Andrew. Listen, I think the one thing that there is a clear role for government in here is that there are very obvious risks we should be partnering with the companies to help fix. If there's a cyber risk, if there's a bioterror risk, we should have really smart groups and really well-funded commissions. We should be partnering, and we should be making sure that we're not creating problems there. And that is something that you can't just throw things out into the wild that a crazy person could use to hurt a lot of people. So listen, I think there's a role for logical safety, and at the same time, they're clearly not slowing down. We're spending trillions of dollars and accelerating, and we're building like mad. This is a very exciting time.
Explain this though. But explain this. We had Elon signed that letter in 23. We now have Anthropic saying the same thing in 26. Should we be taking something else away from that?
You know, I think this is something that we all see is going to completely revolutionize how we build, what we can build. I think in general, when you give people the power to build, this is such a positive thing that helps everyone. There are going to be some bad actors. We've seen now with cyber, you can break into almost everything right now. You probably shouldn't be putting that out in a way that could cause disruption without also first, fixing these institutions.
Joe Lonsdale, it's great to see you. We'll be watching what happens on Friday. Appreciate it.
Thank you.
Meantime, still to come, Mike Novogratz jumping into the data center game. We're going to talk to him, and we'll bring you details about that right after the break. And then later, Senate Majority Leader John Thune is going to be talking about D.C. spending, tax cuts, the president's plan for the economy, and Iran, and much more. Squawk Box will be right back after this.
Still to come, April trade balance data. Squawk Box coming right back.
Welcome back to Squawk Facts. Rick Santelli here live at CME HQ. Hey, with the breaking news this Tuesday morning, trade balance, we're talking April second quarter number. And of course, if it gets bigger, it's because imports are larger than exports. Expecting minus 56 billion, comes in very close. Minus 55.9 billion, and last month's minus 60 billion gets upgraded. Less, smaller deficit, minus 56.6. And that was a small improvement, and that makes sense because imports were 2% of this number, exports 2.6. So we will, in this case, contribute to second quarter GDP. April, of course, the first of the 3 months that make up the second quarter. We see that interest rates, well, they've come down a bit. And yesterday's close in a 2-year represented a 16-month high yield close. However, the 10-year yesterday's close was only the highest yield close in about 3 weeks, the 19th of last month. So we want to pay attention to the wiggles of the yield curve and the notion that the long end is behaving quite well. And with inflation data this week, it's going to be very important because CPI, well, indeed, it may be running a bit lower than some of the annualized wage rates, which wasn't the case from 21 to 23. So these data points on Tuesday, or Wednesday, Thursday, and Friday are going to be key. Becky, back to you.
All right, Rick, thank you very much. Let's take a look at how the market's faring up. You see the Dow up by about 170 points. Steve Leisman joins us right now with more on this data reaction. Steve, what are you thinking?
Yeah, I'm seeing exports up 2.6%. That's pretty good stuff there. There may be, by the way, some oil export in that number there. The United States has been filling some of the gaps out there using both its inventory and release from the Strategic Petroleum Reserve to fill some of the deficit out there. I don't have the energy export numbers in front of me here. Oh, there it is. There's oil import prices at $78 versus $63 in the month of March. So, and then I have April exports 327. That's pretty good. It was down from 382. Guys, the question is whether or not we're making any progress here on this issue of the trade deficit. And there is some modest improvement in the trade deficit as a percent of GDP. But the question is whether or not it's all worth it relative to the tariffs that are being put on. We're not seeing much improvement in the China trade deficit. That was up a bit from the prior month. I'll leave it there only to say that capital goods imports up 226 billion from 119. Part of that reflecting what's happening with the AI build out. We're importing an awful lot of the stuff, the chips especially, that are used in the AI build out. Becky?
Okay, Steve, thank you very much. We'll see you soon.
Pleasure.
Meantime, take a look at Galaxy shares. Galaxy Digital shares, they were up slightly this morning after surging more than 20% yesterday. This after the founder and CEO Mike Novogratz revealing the company's building what he now says will be the largest single campus data center in America. Novogratz adding that the firm has already leased out half of its capacity, and that's stock up 1.5. What is that? 1.5.
All right, up next, Senate Majority Leader John Thune joins us with the latest out of Washington. Futures continue higher this morning. There's Leader Thune with us in just a minute. You're watching Squawk Box on CNBC.
The Pentagon has expanded its list of tech firms linked to China's military. Firms on that list will be prohibited from contracting directly with the Defense Department starting later this month. Those new additions include Alibaba, Baidu, and carmaker BYD. The restrictions could result in some U.S. firms being forced to drop the Chinese firms as suppliers to maintain their DoD contracts. BYD responding this morning, opposing that designation and saying that it is not a military enterprise.
Meanwhile, Apple using its Worldwide Developers Conference to roll out a long-awaited overhaul of its Siri assistant. The more conversational Siri will be branded Siri AI, and Apple also unveiling a next generation of its Apple Intelligence technology. That, of course, built on the models developed alongside of Google. Privacy was a big theme, Apple emphasizing that user data that's processed by Apple Intelligence won't be stored or accessible to the company. The software updates will be launched along with new hardware coming this fall, but Siri AI won't be available in Europe and China because of regulatory issues. Take a look at Apple shares. They fell during CEO Tim Cook's keynote address. They ended the day down about 2%. We've seen this movie before. On the announcement, things go up. On the or the expectation announcement, on the announcement itself, things go down. Joe?
NVIDIA CEO Jensen Huang has declined an invitation from Senator Elizabeth Warren to testify before the Banking Committee this Thursday about the company's business in China. The senator had asked Huang to share his views on U.S. export controls, which govern the sale of its chips abroad. In a letter to Senator Warren, Huang said he would be unable to attend, but said he appreciated the committee's focus on the issue. Senator Warren responded, if Mr. Huang has time to attend a $1 million a head dinner at Mar-a-Lago and fly across the world to meet with President Xi Jinping of China, he should be able to find time to answer questions from Congress. Here's a check on the markets this morning. We are seeing some green across the board. It's continued all morning long as oil prices have moderated slightly this morning. You can see the NASDAQ getting back again today, rebounding from that big sell-off on Friday. There's Treasuries. Rick mentioned that on the trade deficit data. Here is oil. Continues to trade below 90 this morning, down about 2%. And then I think we're at 62,000 or so on Bitcoin this morning. Maybe it's stabilized, who knows. Join us now on the latest from Capitol Hill and all the news. Senator John Thune of South Dakota. He serves as Senate Majority Leader. Leader Thune, thanks for joining us this morning.
Good morning, Joe.
Finally did it. And it's even called a votorama, isn't it?
Yeah,
the votorama. What would you call the journey to finally get immigration enforcement funded? What would you call it? And how do you explain it? And what did either side get out of that? What would you call it? It was a long, I mentioned Grateful Dead yesterday. What a long, strange trip it's been.
It is indeed that, Joe. And you know, the marathon at the end, the votorama, which went on for, I don't know, 15, 18 hours, something like that, is at the end of every reconciliation process. But unfortunately, we had to use that because Democrats wouldn't fund ICE and CBP through the normal appropriations process. So we had to do it with Republican-only votes. It got a little complicated along the way, but we were successful in defeating all the poison pill amendments that would have taken it down. And this week, hopefully, the House will vote on it, put it on the president's desk, and we'll get those important law enforcement agencies funded. But it is really unfortunate we had to resort to this. I mean, the Democrat mantra now is defund the police, open borders, and we're seeing more evidence of that this week as they block now the Foreign Intelligence Surveillance Act reauthorization, which is a critical tool that our intelligence agencies use to keep Americans safe.
Yeah, and there's a lot of nuance and ramifications, and I want to stick with this immigration topic. There are some senators that are actually talking about Mark Wayne Mullen's plan, which seems drastic, and Democrats' hair is on fire about the possibility of not allowing DHS and CBP employees in sanctuary city international airports. I mean, we're talking about some major cities, Senator, Boston, Chicago, Denver, LA, Philadelphia. there's some support. I don't know if you've weighed in on whether that would be something that you think is necessary at this point.
I've heard it suggested, Joe. Obviously, I think there is a high level of frustration at the sanctuary city policies and what they are doing to a lot of our major cities in this country. And I think the Department of Homeland Security, Secretary Mullen, obviously are coming up with ideas that they think would help at least incentivize a lot of these cities to start behaving in a way that doesn't give sanctuary to criminal, illegal aliens in this country. That's one idea that's out there, or a number of them that are out there, but frankly, I think the sanctuary city policy coupled with defund the police, coupled with open borders, these are just Democrat policies right now that are anti-law enforcement and frankly are dangerous with respect to a lot of America's biggest cities, and ensuring that those communities and those streets are safe and secure for people who live there. So, you know, we've got to do something about sanctuary cities. Now, whether that's an approach that makes sense, I haven't given a lot of consideration to that yet. I think there are a lot of issues that have to be addressed, but I do think there are. It's one among many ideas that are designed to at least disincentivize a lot of these big cities in this country to continue these policies that are giving you know, safety and home to a lot of criminal illegal aliens.
And Senator, we've been talking about voter integrity. We had Jay Clayton on yesterday in reference to, you know, what's happening in California, and I don't know. I know there's a lot of other fraud that goes on out there, so I don't know what went on with the voting process. They have a bizarre system to try to count for all the votes, but you saw what the president said. You see that some of the stuff, maybe it's conspiracy theories online, but should there be a question in Americans' minds about that? And I feel your pain, Leader Thune, with the SAVE Act, because if you don't have the votes, you can't do it, but you're not going to get any Democratic support on that. What is the problem with what is their position as to why that doesn't make sense to show voter ID? And I can think of some good reasons why you wouldn't want to if you were a Democrat, but this isn't the way it should be done. How do we strengthen, you know, our notion that voting has integrity in this country?
Right. Well, and I think that's a question for the Democrats who block voted against the very simple issue of voter ID, which we've put on the floor now a couple of different times. We've had the entire Save America Act on the floor a couple of times too, but we've had the specific rifle shot vote, if you will, on whether or not you have to show a photo to vote in this country, and every single Democrat voted against it. And it does beg the question, and you see a state like California, and Joe, you always hear about states being the laboratories of democracy, and if there are lessons learned from some of these states like California, it's that this is a really stupid way to run elections, because it undermines the confidence and trust that people in California and across the country have in those elections. Now, frankly, you have to prove if there was cheating, and clearly that's something that you would have to do in California or anywhere else for that matter. But the fact that it takes days, literally days, to be able to count votes in a state like California, when there are other states around the country who do that very quickly and get an outcome and a result, it's incompetence if nothing else. And you know, whether or not there was actual rigging is something that have to be proven. But clearly, this is a system in California that doesn't work and doesn't inspire confidence and trust in voters by the voters.
Senator, there's the motor voter law, California, AB 60. Automatically registers citizens to vote when they get a driver's license, and undocumented immigrants get AB 60 driver's licenses. It's supposed to be screened out that they're not able to be registered to vote, but already we know in the past at least 100,000 erroneous voter registrations got through. In California, I don't think will allow a federal audit at this point to know what's going on. Are you going to be, is there any way to get in there and actually know what's happening in California? We know about Medi-Cal and how you can sort of, I think the big beautiful bill tried to get to close some of those loopholes. But there's things going on in California that the federal government is not even allowed to really look at.
Right, and part of the Save America Act, Joe, is not just ID, show to ID to vote, because a driver's license, like you said, could do that, but also showing actual citizenship to be able to register to vote, to get on the rolls in the first place. So those are both safeguards that would help safeguard our elections in this country, all of which, as I said before, Democrats in the Senate have block voted against. But you have to, if California, and I think that, you know, anytime there's a federal nexus, yes, there'd be federal oversight. In most cases, at least, we have reserved the right to manage and run elections to the individual states. But California clearly has a system that does not work, as is evidenced and demonstrated every time there's an election in California, and it drags on for days on end, and voters, you know, the vote comes in, and voters across California and across the country are skeptical and question the outcome and the results there. They've got to fix their process. But to the degree that there is a role for, you know, federal oversight, obviously we would take a look at that.
Yeah. I don't know if you've weighed in. I wanted to ask you myself, and you feel free to answer or any way you like, which you do, obviously, but the whole situation in Texas with John Cornyn, and I know that, you know, that probably, in your view, that he might have been a better candidate. I don't know. I'm not going to put words in your mouth. And then just overall, the Senate, the betting odds have flipped back to the Republicans slightly at this point, but there's a situation in Maine, there's a situation in Texas. Can you just comment on all those issues, Senator?
Right. Well, it is an even-numbered year, and we've had an election every even-numbered year going back 250 years now. So you're going to have a lot of these fights in different states, and clearly the map in the Senate this time, it puts the Senate up for grabs, if you will, but we feel confident. We've got quality candidates in all the key states where we're going to have competitive races. We intend to make sure that they're well-resourced, and if they are, in spite of the political and economic headwinds that we might be facing, I think our candidates can do well, and we can preserve and protect our majority of the United States Senate. We're even focused on winning some seats in their Democrat-held seats right now, Joe, and so you've got to be playing offense a couple of places, and we've got a couple of states on the map where we're doing that. But, you know, at the end of the day, it's going to be up to the voters, but I would argue that the Senate is the firewall. And if you want to get any judicial nominees, executive branch nominees across the finish line in the next 2 years in the Trump administration, you have to have a Republican majority in the United States Senate. And so I think as people go to vote this year, they'll be voting a lot of issues, and pocketbook issues will be a big part of that. Those issues always are front and center for voters, and we need to make sure that we're talking about and addressing those. But I also think safe streets, you know, borders that are safe, and you know, neighborhoods that are safe is going to be a big issue, and that's one, as we talked about earlier, on which the Democrats are completely out of step with the American people.
Senator, I don't know whether you know what you think of a Senator Paxton, and I mean, he's going to be the nominee. I guess you do support him, but if there was criticism of him, then people would say, well, the Republicans just, you know, they want to make sure they keep that seat, so they'll back Paxton. Is that the same as what's happening in Maine? That the Democrats want, you know, they want that seat so badly. I think they twist themselves into a pretzel to support anyone they ran up there with what we've seen recently. Is that analogous? What's happening in Texas? What's happening in Maine?
Well, to my knowledge, Ken Paxton doesn't have Nazi tattoos or sympathetic to Nazis. I think there is a clear, obviously, distinction there. And the voters in the state of Texas are going to have to decide who they want there. We want Ken Paxton there. We think keeping Texas red is good for the country. It preserves the majority of the United States Senate. State of Maine, the voters there are going to have to make a decision. They've got a primary today, but this guy has a ton of liabilities. And you know, a misogynist Nazi is, if that's what the Democrat Party in this country wants to endorse and subscribe to, they've got a candidate for that. But we think that Susan Collins will win re-election there based upon her record of accomplishment and the way that she represents and serves the people of Maine. Each of those states are different, going to be treated differently, but I'm confident we win in Texas, and I'm also confident we win in Maine.
How much money do you plan to spend defending each of those seats?
Well, Becky, you know, the couple things about that. Obviously, we identified early on, we knew we were going to be in Maine. Texas is a different scenario, obviously, and we're certainly hopeful that the president and his allies will weigh in heavily in the state of Texas. It's a very expensive state, but the Democrat nominee down there is a far left liberal on so many levels, and completely, I think, out of step with certainly a majority of voters in the state of Texas. And he will have to be he will have to be defined through the course of this election. That's going to take resources, but there are lots of folks out there who are going to be invested in retaining a Republican majority in the United States Senate. We will be specifically focused, as I said, on a number of states that we have identified where we've got competitive races, and of course Maine being one of those. But we're hoping that there will be others who step in and help in places like Texas.
Senator, I can't remember exactly how many votes Kevin Warsh got the first time around. I mean, do you think Todd Blanche is possibly could get confirmation? You won't get any Senate. You won't get any Democrats. You know that. You think you got enough Republicans for him to become permanent AG?
Well, the one thing that we will ensure, and he worked closely with us during reconciliation. He's obviously, he's experienced. He's been serving there, and obviously we will ensure that he gets a fair process. Senator Grassley chairs the Judiciary Committee. He would have to come through that committee, to be reported out to the floor, and then the confirmation vote on the floor would follow. And obviously we will ensure that he has a fair process. He'll have to make his arguments, and I think the one thing that, obviously people are paying a lot of attention to is this question around the weaponization fund, and the questions that he's answered around that already will, I would expect, will continue to be a factor through the course of the confirmation process. But clearly experienced and qualified, and as I said, he's somebody that many of us have worked with, and so we will ensure that he gets a fair shot, and on a confirmation, if he comes out of the committee, a vote on the floor. Now, how many votes he gets on the floor remains to be seen, but my expectation is we wouldn't bring him to the floor unless we thought we could win.
And just real quick, will you be behind another reconciliation bill if Speaker Johnson pushes one?
We are obviously open to that, Joe. Clearly a reconciliation 3.0 is something that's been considered and talked about. There have to be a specific reason for doing it, and you have to ensure that you've got 218 in the House and 50 votes in the Senate for it. These have become increasingly hard as we've gotten into this year, and a few of these primaries have gotten behind us. There are votes that are harder to get now in the Senate on some of these things, but we did fend off a lot of really bad poison pill amendments last week on the last reconciliation bill. What happens on the next one remains to be seen, but we're not ruling it out, let me put it that way. Open to it, but also recognizing it has some serious challenges ahead of it if we get another reconciliation bill on the floor of the Senate.
That's interesting.
Great, Senator. Thanks for all your time this morning, and hope to see you again in the near future.
Good to be with you all. Thanks, Joe.
Okay.
See you.
Okay. Up next, Stocks on the Move. We'll be right back.
Breaking on Squawk Box this morning, investors sold Apple stock during yesterday's Worldwide Developers Conference, but Morgan Stanley thinks that was a mistake. The firm liked what it saw enough to raise its price target from $330 a share to $360 a share. Apple is slightly lower in the pre-market. It's falling below that $300 mark. Trade deficit data coming in at $55.9 billion for April. That's slightly below the consensus estimate. And British drug maker GSK is buying Massachusetts-based Nuvalent for $10.6 billion. Nuvalent develops drugs to fight cancer. It's really focused on lung cancer primarily. Those are the first two big indicators that it's going to be pushing forward. And this is GSK's biggest acquisition in a decade.
That have markers, certain markets, not non-smokers for non-smoke, but they have some kind of genetic marker, and this works for the, I don't know how big the market is.
Right. Want to go get over to Dom Chu real quick with this morning's pre-market movers before we hand it over to our friends on Squawk on the Street. Dom.
All right, so Andrew, how about Smucker's shares higher by 3% after the company reported better than expected earnings and revenues for the quarter? But the Jif Peanut Butter and Folgers parent company projected a sales decline in the coming year, and it leans a little bit more away from price increases. Those shares up 3%. The chip stocks are continuing to rebound from that sharp sell-off on Friday. Shares are higher pretty much across the board after climbing yesterday. Micron and Intel up about 10 to 11% yesterday, higher by 2 to 4% in the pre-market trade so far this morning. And we're going to finish off with a check on shares of Alphabet, higher by just around maybe 2/3% at this point after analysts at TD Cowen raised their target price on the stock to $475 a share. It was $450. That's implied 30% upside from yesterday's close. Analysts say they expect the company's gigawatt capacity to rise at least 10 times to support the sharp growth in enterprise and consumer demand. So keep an eye on those shares. And as always, check out cnbc.com/pro for all the details. Subscribers there get all the context around those big analyst upgrades and downgrades, guys. I'll send things back over to you, Becky.
All right, Dom, thank you very much. That does it for us here today. Make sure you join us right back here tomorrow. Right now it's time for Squawk on the Street.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. Favors on assignment today. Bulls trying to build on Monday's bounce as markets react to Apple's Developers Conference, Jensen Huang's ongoing rockstar tour in South Korea, and now OpenAI filing confidentially for an IPO as early as this fall. West Texas below 90 as the president again says talks with Iran are in final stages and that a deal could be reached in, quote, 2 or 3 days. Our roadmap begins with the tech turnaround. NASDAQ snapping that 3-day loss, looking to extend the bounce back. As we said, OpenAI joining the IPO frenzy, filing confidentially with the SEC just a week after rival Anthropic and days before SpaceX's public debut. And did Apple do enough at WWDC to impress investors? One firm raising its target following yesterday's announcements, but the stock is trying to avoid its third straight day of losses. Let's begin with the markets. Tech sector continues to bounce back from the sell-off on Friday. Chips leading the rebound today. Jim, a lot of discussion, Goldman and Citi's desks asking whether Friday was a one-off or a sign of ongoing fragility in this market.
I think that's right, and I think that what you want is to broaden the rally from semis. If it's just going to be the semis that I see going up in pre-market, that's not what I want. That just reflects on the fact that Korea was up with SK Hynix and Samsung. We don't want that because we want software and hardware up. And to do that, a company that no one's been talking about this morning is SailPoint. And the reason I talk about SailPoint is that Thoma Bravo's software, enterprise software company that actually precipitated the entire decline that had to do with private.
Sale was the canary?
SailPoint, well, yeah, because they just can't seem to raise guidance. They have all these different lines that they have, and they're very, they give you all the numbers, but in the end, adjusted EPS change from prior guidance is flat and 0-0. And when you do that in your enterprise software company, then you get hammered. And the reason why SailPoint matters is that if you looked at when it began to break down, the IGV, which is the index that everybody uses, it's an actual ETF, was 110, and SailPoint was at 21. And then SailPoint drops to 20 to 10, and IGV goes to 74. And it was actually dispositive. It was not, it was correlative, but it was also the leader. SailPoint, Thoma Bravo, major deal. just not getting it together, and still one more cybersecurity fraud. I had one on last night. I mean, you could argue that Octus does the same thing. You could argue that when Palo Alto, when Nikesh Arora bought CyberArk, it did the same thing. This stock is what people key on because it's private credit is everywhere.
Isn't ARR still growing 39 or something like that?
It's not. It's the speed of the ARR is not good. In other words, ARR is 21 to 22 for fiscal year 27, and it had been 26% for year over year. So it's like slowing down. The rate of change is slowing down. All that I really care about with this is that this is a deal that did make people say, wait a second. Maybe we should be worried about enterprise software now.
Which you have been.
Which I have been because it's just so depressing. I mean, I noticed that you'll notice a lot of the ones they're down today, and you want to see balance. You don't want this just to be
about chips,
right? And by the way, the chip company that matters the most is the one that is in the news the most, which is NVIDIA, which is the one that is not up the most. As a matter of fact, it's barely up. And yet we have a lot of different companies. I mean, we had that the Chinese cutoff from Taiwan Semi from Taiwan, which would typically mean that more chips are going to flow NVIDIA's way.
Yes.
But what are people buying? They're buying Western Digital. They're buying.
Marvell's up another 5 after 10 yesterday.
Now, I think that Marvell should. Look, Matt Murphy, no one's bigger champion than I am, Matt Murphy, but that was an anointed stock. I personally wish that had not occurred because it does set up maybe unreal expectations for what Matt can do.
Right. And of course, we're going to talk about Apple in the B block, but they're moving beyond their own silicon. It's going to work with NVIDIA and Google. And we'll talk about sort of the privacy questions as a result of all that. But Morgan Stanley does take it to 360 today.
I like the Morgan Stanley call. I also like the Melius call. Look, one of the things that happens in these and why they've been bad trading events is that people get all bulled up that they're going to say something. In reality, the way Apple's an incrementalist. They're not a company that shocks you. They give you things that are better than they were before, and you have to make a measurement about whether you want to upgrade or not. And I don't think that's bad. I mean, they're not going to have one that's run on water. Suddenly get it. It's like you don't need electric anymore. It's run on a vial of water. That's not the way Apple works. But the most important thing Apple does is, and when you speak to Tim Cook after the quarter, I get to speak to him a quarter of 3:30. I was switching. How's switching? Well, Samsung, the people of Samsung keep switching to Apple. That's just a continual theme. You do not get people going from Apple to Samsung because you didn't get what you wanted. Wall Street didn't get what it wanted, and I think that a more intelligent Siri is going to matter a great deal because people really know that Siri not that representative of anything in your arsenal that's good, but you have to have a 15.
Yes, and we're going to dive into the discussion about Siri's capabilities and the sort of geographic ability to get it later in the year.
I know, and we hear China not so good.
But it does sound like your larger concern continues to be about supply. OpenAI's, we have this quote from Sam Altman. They knew this was going to leak, so they decided to announce it.
Fall. They say not until fall.
Yeah.
Well, how about if it starts going better and they can say it's June? Now you can say, well, we're not going to do that, but they can do it. And by the way, I mean, did the Amazon Canada bond deal, did that say how much Amazon needed? And I look at these deals and I say, all right, I want to see, Sienna does a convert, I want to see the tremendous book of retail go well today because I just feel that SpaceX still holds the key. If SpaceX does not do blowout, but I mean, SpaceX has to do two things. They have to blow it out, but not do it so high that it's Cerebras was horrible. I mean, I had a guy last night who called about he got hung on the deal and he said, "What do you think I should do?" I said, cut your losses, man. It's just bad. I mean, they priced it okay, but they didn't have any stock to be able to offer, or they shorted it badly at the opening, and 360, 350, and it goes to 380, and then everybody who's bought it's got a loss, and that's what you really want to avoid. Like if I were Goldman and Morgan Stanley, I'd huddle right now and say, how do we make it so the people who bought don't have a loss? Let's just do that right. That's what Elon wants. Let's figure that out. Problem is, it's very hard to figure out.
Yeah, very hard. We do know that it's well oversubscribed. Order books might close Wednesday afternoon, not Thursday.
Yeah, they should bring it Thursday. They shouldn't bring it. They shouldn't wait till Friday.
Right. Morningstar values it at 63, which would be a 53% discount
I
to
got
the
your
IPO.
Morning Star at 10. I mean, honestly, I've been
Well, is
saying...
it any different than Morgan Stanley saying in 2040 you're going to hit 3.4 trillion?
No, but I do think that you have to... Look, has this guy said anything about near term? Nothing. But if you have a sense that that there's a vision in this country, and you want a piece of a vision in this country, you buy that company.
I mean, at 175 trillion, Jim, it's about as large as an entire aerospace index, which would include Raytheon, Lockheed, Boeing, Honeywell, the whole thing.
Okay.
Yeah, I mean, that's...
I don't like that's the case. I don't like that. But what does that matter? I mean, one of the things that I've learned about the market is when you do a comparison, it's like, it's bigger than Ford, it's bigger than Macy's. Well, so what? It's what the market wants. And this market wants a piece of Elon Musk. It really does. And I think you almost have to look at it like sports. Like, there isn't anything that's it's emotional. If the Knicks had won last night, the Knicks are the greatest team ever to play. Well, SpaceX is the greatest team ever to play. And I do think that you can make a case that I want a piece of a company that wants to mine on Mars. Why? Well, because I've seen movies where they mine on Mars and everybody makes a lot of money. And, you know, I mean, look, it's a dream. But maybe, and this is where I think people are wrong, and I don't mean to make fun of the people from Moisture, but it's not like that's all there is. I mean, it's not like Musk he writes this and he says, okay, I want all thinking shut down. I don't want another single piece of thought to get into our minds. No, he will have so many things that he does with this company before he puts people on Mars that I'm just not going. I want to be along for the ride with what he comes up with next. He is not an incrementalist.
No. And to your point about sort of wrestling with huge new market possibilities, the CFO did talk about data centers in space. Here's what they said.
The fact that people are already having concerns about, I don't want this data center in my backyard, you know, is clearly a trend, a little bit concerning trend. And so the fact that we can bring a clean energy, you know, good for everybody type solution by just sending these up and being powered entirely off the power of the sun is pretty amazing. If you look at the satellite, most of the cost is silicon, right? And so we're ramping up factories and we're benefiting from silicon, you know, cost reductions, process node to process node. So our costs are going to go down over the next few years. If you look at the terrestrial solutions, the curve is going the other direction, right? Everything's getting more expensive, right? The way you're doing the cooling, power bills are not going down, and you know, land/regulatory is getting more and more challenging. And so I think this just all lends to better for the population and a trajectory to be significantly better from a cost perspective as well.
Talk to the largest independent builder of websites of the data center, and I said, well, look, the first one will be small. They'll give it a nice try, and it will work. And then the second one will be good, and then it'll get larger and larger. And I said, don't you think this is just all one big con? I said, no, everybody's looking at it. We all want to put them there. We all sense that the solar power is the way to go. And he said, and why is the media making fun of it? We're all looking at doing it. And I found myself thinking, once again...
This was a terrestrial company?
This big terrestrial, the best, I think the best terrestrial builder. He said, look, we all got to think about it because we're all out of power. And, you know, if you are, you know, you have Elizabeth Warren on one hand, you got some city government doesn't want it, you have utilities that don't have it. Well, I mean, you just don't have to think of it as being the biggest data center ever to be launched. It might start off as being the smallest, but if they have proof of concept, it's kind of like a drug. They have proof of concept, and the next thing you know, they roll it out. So, by the way, when I talked to this guy, I wanted to shoot down what we said. I wanted to and I did. I was naked. I said, I did a typical when I was like a 28-year-old journalist. Give me something to shoot this down. I need something really negative. That's what you did when you were a hack. And I can't. He said, no, I can't do that. I said, come on, man, I want something negative. Come on, I'm gonna go. He says, why are you being like this? It's actually pretty viable.
I think looking for balance is not a bad thing.
No, I know. I don't know why I was in the old Hatchet John mood. Maybe it was my long time stance as a homicide, not a detective, but someone who wrote about it and then always had theories.
Yes. We're going to get to, actually, there is news on Nebius and CoreWeave and Applied Digital today. Take a look at the pre-market. We'll cover Apple and what Tim Cook told the audience about developers and the opportunities later in the year when we come back. Stay with us. Apple shares off their lows in the pre-market a day after showcasing AI advances at WWDC. They include an AI-powered version of Siri, emphasizing the digital assistant's ability to protect user privacy as the company looks to challenge Claude and Chat. Siri AI slated to launch in the fall. Although, Jim, China will be an issue. EU regs are apparently an issue.
Yeah, and when are we going to be able to get ours? The waiting list, how's that going to work? Right. I mean, short term, yeah, there's some issues. Longer term, I love that we were talking, it's late, but so what? We want it. I can't wait for it. I think it's great now that, like, I can say put on certain music, come on. But what I really want to emphasize to people is I think these are all things people want. And you may end up paying for some things that you didn't pay before, and it's a service revenue stream that drives the gross margins, and the gross margins would drive the stock, and the next thing you know, buy. And I think that this thing maybe, if there isn't too much supply and SpaceX goes bad, right. I think this one can hold.
You don't think Apple's? I don't think you think of Apple as a source of funds the way we think of Bitcoin.
I think NVIDIA is a source of funds. Yeah. I don't think Apple. I think Apple is owned by different people. Now, I don't think NVIDIA should be a source of funds because all the money that's being raised is to give to NVIDIA. And Jensen is showing you that sovereign matters more than you think. That's what all this is about. Sovereign's 14%, but the pipeline could be up to 40%. Pipeline. By the way, the reason why sovereign's so important is they don't care about quick payback. I mean, right now the idea that we keep hearing when Amazon talks about Amazon Web Service, the quick payback is not with. It's some of the.
Oh, no, you're right. I mean, think of the item on the tape this morning about China. And what is it, 295 billion in data centers over the next 5 years.
Yeah, I mean, it's funny because we're going to raise that over the next 5 days.
Yeah, exactly.
Yeah, I mean, they wish they had a stock market like ours. I didn't tell you, I'm saying that China's not a paper tiger. I see the robots, they look great. But they're behind, and I don't want people to think they're behind because we're based on NVIDIA.
Well, Jensen would argue when it comes to energy, they're actually not behind.
Well, they don't have a lot of laws there about, they can put up all the coal plants they want, and they're ahead of us in nuclear. Obviously, we're trying to be in nuclear. It's a balance because they can wreck the environment freely for not just them but for everybody because it is kind of one Earth. But I do think that in the end we've got better tech, and we're going to continue to have better tech.
Meantime, as we're talking this morning, Broadcom, with this deal with Apollo and Blackstone, Jim, this is a $35 billion private credit deal to help Anthropic essentially purchase TPU chips backstopped by Broadcom.
Oh, good, because I'm still reeling. My Chapel's a big position, Broadcom. We managed to sell some high, but still reeling from that disappointing quarter. And it was disappointing. I mean, the guidance was bad. When I was listening to it, I said, oh, damn, we're going to get crushed. And then we got crushed. You hate that. You kind of feel like sometimes when you're like a hedge fund manager, oh my God, it's going to be horrible. And then it's not good, but no, this was horrible. And I'd love to see Hawk-Can come out. I know he had a radio broadcast. He didn't really change it. Nothing new. I need insider buying here to be able to justify what's going on. I don't think this is the type of thing I'm great. So they have an SBU. I mean, so what? What I want to see is better orders. And I don't want to see them created by themselves. I just want to see, Google say, you know what? We don't need the NVIDIA that Elon Musk has because we have our TPUs, and everyone wants our TPUs. They don't want NVIDIA. No, they want NVIDIA. That's the problem.
Yeah.
I mean, I didn't count that. I thought Broadcom is good. No, that was wrong. They want NVIDIA.
Meantime, Jensen Huang's charm offensive in Korea continues.
Yeah.
Whether he's dancing or throwing first pitches or eating at restaurants.
Yeah, those are all good. What I like is signing deals. See, and I don't want to see him. I just want him signing. That's great. He does all those things. I actually did a Twitter/X about he's throwing the bags out. I got the HBM chips. Hey, look, he will get deals, and he'll be sensational, and all this stuff matters. And I don't mean to make fun. I think he's the greatest guy. But I do think that we need sovereign orders, because sovereign orders, like we have in almost every country, I work for NVIDIA. Maybe I work for NVIDIA. But I do think that the reason why this stock is stuck at 209 is because the proof in the pudding would be a gigantic order from Korea. Just saying, listen, we're going to be number 2 in the world when it comes to sovereign after the United States, and we're not going to let anybody beat us. And then Singapore does it. Qatar has good orders, UAE has good orders, Saudi Arabia has good orders, Israel has orders, India they think is going to be good. Sovereign is the way to go, but it's still hyperscaler, and you can't be levered to hyperscaler because Google and Amazon keep saying that their chips are better, even if the customer doesn't even want it when it comes to Google.
Yeah.
And Google, by the way, you got to be careful because some of these are Marvell Tech.
Yeah.
Some of them are, Marvell Tech is, like I said, I think they're terrific. Some Broadcom. Marvell Tech had better numbers than Broadcom. They don't really compete on. There's certain things that they compete, but not much. Cisco competes more.
Sovereign demand. I mean, that was an issue raised by Jensen 2 years ago, something like that.
And, well, what happened is that the previous administration decided that we had 17 friends. There was some huge number of friends that left off another 120 countries. And they don't have that anymore, and that's good because it seemed pretty arbitrary. But NVIDIA's got to go up. All this is about buying NVIDIA chips. And if NVIDIA stock stays here and eventually starts selling at 10 times 2028 earnings, then this market's going to be defeated. It will be defeated. It will not be determined by SpaceX.
It will be determined by NVIDIA. Yeah. We'll get Kramer's Mad Dash countdown to the opening bell. Take another look here at the pre-market as we try to get this momentum of the week continuing. Stay with us.
We don't need your help. Please. your help. Try. So poopy. Hey. Oh, there's some coffee. Sniff. That might do it.
Okay, his legs. Oh, 5 minutes left.
Take a look at some leaders this morning. Micron, Goldman goes to 900. Smucker as well. We'll get to some of these consumer names, a double beat over there, and some serious pricing power, which we'll talk about after the break. Opening bell in a few moments, and don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
best. Peace deal, peace deal. We have 2 minutes, less than 2 minutes left. That's all I hear is peace deal.
Time for Kramer's Mad Dash as we count down to the bell here.
Yeah, everybody in the food business likes Mark Spucker. He's a terrific guy. When I go out with him, I've always just...
What'd you say?
This hostess app was from $5.6 billion and talk about late 2020.
Sorry, you have no cleavage.
With the US,
Oh, God.
largely to do with the fact
Sammy has no
at the
cleavage.
moment. We've got to remember that Taiwan is also on the receiving end of a lot of arms sales from the US. By law, it is bound to try to help Taiwan defend itself, and so that is something that has obviously unnerved Beijing. It will not be happy about, and it's likely not going to be very impressed with what we've heard here. But it does come as it obviously tries to align itself with the export controls we've seen here in the US, which have been very strict. We have seen that circumvention, some of that smuggling. That is what they're obviously trying to stop here with closing some of these loopholes.
Yeah, and I think also interesting because we also get these reports
here we go.
of all these Chinese companies, suits firms saying it's really in support
China.
that could at least heighten some of the tensions with Beijing. And so that also, I think, speaks to some of the stories we're getting out of Taiwan at the same time.
Right, so double whammy, obviously just adding to the pressure here. Interesting timing, Alibaba was actually put on this 1260 list earlier this year. It was taken off within minutes. We did see a subsequent move in the stock off the back of that. That was ahead of the Trump-Xi meeting. Now we've seen this coming from the Pentagon after the two presidents have met. So just keep that timing in mind here. This is largely not a good look rather than anything substantive for these companies. But we have seen the Pentagon adding Alibaba, we've got BYD, Baidu, not hurting the shares, it looks like, this morning in some of these companies because, as I mentioned, largely symbolic in nature rather than substantive. But it could be slightly awkward for the NBA, which is obviously something that we've been watching very closely because Joe Tsai, the chairman of Alibaba, is a big donator.
Watching very closely, huh?
About us for all that breakdown, and there is the open as markets do kick off another strong session.
Spy, I got 643.82, please.
All right, so checking in on things here, we are still, again, firmly higher in all four of our major averages. S&P is opening up about 0.5% higher, where we're seeing the NASDAQ also with some strength today, up 0.9% here as it stands, actually, and continuing to gain here in real time. The Dow also up about 0.5%, and the Russell 2000 still leading up just shy of 1% as it stands right now. Still seeing some weakness, though, in a lot of these futures products as the dollar, crude oil, gold, 10-year all lower today, and VIX also still falling here now at around an 18 handle. But for some of these moves, of course, following the open, we are now joined by Diane King Hall, host for the Schwab Network. And so, Diane, we talk a lot about Micron.
We talk a lot, that's for
getting
sure.
some further love from the sell side today from UBS specifically. What stuck out to you in this analyst calls? This name's now up another near 4% right out of the gate here.
Well, UBS is really just standing by their man. They're that one, the house that
74,
target by triple
55, 75.
to the races, and you have Micron above that $1 trillion market cap, and that was the thing. Investors were really excited about that. Goldman is the one with the latest boost to its price target here from Micron. It's playing catch up though. They just raised it to 9.
I've never played catch up playing stocks. FOMO. Well, on SPX, I have 745575 as resistance. And there goes my phone. Could have been a spam call right off the bat. Right in front of an important call. 7455.75 resistance. I think that was very rude. If I could sue him, I would. Today's the 9th. Okay. Wow. Jim's watching real close. Go to the 2-minute SPX. Oh, there it is. See it? Two minutes, a little bit cleaner. I'm going to suggest 7.4 right here. 7.4 40 80. The alert's been set. We don't want it to go no lower than that. The alert. Okay. AMD. Tweezer bottom. That IWM. Whew. Look at that. So SPX says I got a little bit more to go, not much. And everything's at support to stay bullish, including the IWM. There's a big fat candle. Oh, there it is. Okay. Ladies and gentlemen, prepare ye in the name of the Lord. Oh, I'm a little scared right there. We just now hit and broke resistance. Ooh. Break out with authority. Nice. Wouldn't you say? I'd say so. No, I haven't treated chili. 745s. No, it's a new high. Very nice. Three white soldiers pulled back to the 9. Boom. 3 white soldiers. So if you don't chase it, if it pulls back to its previous resistance, called stair stepping right now. 745s. They're now at 170. Profit taking time. Boom. Thank you, Uncle Jimmy. Now it's hit the 21 months before. Oh. Oh, yeah. Woo! Oh. Nice. Pull back. Squeeze. Volume.
The energy prices, you could see a pullback in the economy. I don't see rate hikes as being being on the radar. I don't.
You don't.
I think that's a great point, and Alex,
Neither do I.
about that because a lot of times I feel like we overcomplicate things. Do you think right now this market is still hugely driven by like the memory and storage trade?
Yeah, I mean it is. It's the momentum-driven market, but I think what Dan was saying is an important point, and it's sometimes overlooked.
Tried to tell you.
Crude oil spikes typically actually cause economic weakness. So if you were just looking at the Fed playbook, historically, it would say we need to move rates lower. But every time post-2022, anytime there's any sniff of CPIs hotter than expected, it's first thing we do is jump to rate hikes. In a vacuum, higher energy prices actually means lower rates because it means less economic output.
And I think a great point there, and it will be definitely some interesting reads tomorrow. I like CPI. I know I'm a huge nerd, so I like read all of the individual components of it, but probably very alone in that thinking. But appreciate it to our panel today,
No, you're
for
not.
helping us wrap up the show. Alex Coffey as well as Dan Grant. Thank you for joining us this morning on Opening Bell Morning.
Lower them or leave them alone, one or the other. Do not raise.
Checking. The checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row.
Right
With
now,
investor
you're going to
checking,
find out
you
if you're
get the
bullish or
award-winning
bearish.
Features of our checking account, plus cash management solutions,
Right
all
here.
designed for investors like you,
Blended.
with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced
Okay,
security
Jimmy's watching
features
it
to
real
keep your
close.
money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds,
74
money market
90s.
funds, and more. Get more with Schwab Bank Investor Checking,
74
the checking
80.
account built for investors.
At $8.
Schwab coaching is concepts brought to life in the real world.
Schwab coaching is learning constantly. It's relatable, it's practical, clear, understandable, and hopefully entertaining. Take it for what it's worth, but I think it's absolutely world class.
Schwab coaching is actionable, individualized, community, growth, and empowering.
It's really a human touch with your investing.
We have coaches who have been in the industry and around the industry for a long time.
So the nice thing about Schwab coaching is that clients get access to 9 different sets of expertise.
We want to engage with you in chat on the shows we host. We want to engage with you outside of the classes we host.
A consolidation that could add to this trade. So we shall see. We have different formats because people learn differently at different times.
If somebody's a real bookworm, we've got courses for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every trading day.
Ongoing 24, 25 times a year events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
They're kind of helping each other learn step by step along with the education that we provide them as well.
We're going to be able to help you regardless of where you are on that path of education.
It's really unique, not just that it exists, but that you can tap into 30 some hours worth of it each and every week. How incredible is that? And it's free.
Don't trust them.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
Good morning, everybody. Welcome to Morning Trade Live. I'm Sam Bardas, live from the floor of the New York Stock Exchange. We've got plenty to hit on both here and abroad over the next hour. Here's a look at what is coming up. We'll get an economic health check and discuss what the labour market and consumer data are telling us right now about the economy and the path ahead for the Fed. And over the next hour, we'll have example trades for Apple and Tesla. Apple getting plenty of reaction after the Worldwide Developers Conference keynote presentation yesterday, and we'll discuss what the future looks like for Tesla and Ford in the automaker space. Let's take a look at where markets are trading half an hour into this session, because we are going for back-to-back gains here as we kickstart, of course, a fresh trading week on the highs, an extension of the gains today off the back of the slump we saw at the back end of last week. So the S&P 500 charging ahead to the tune of 0.7 right now, 74.56 right now. The Nasdaq 100 up about a similar percentage point, as well as the Dow Jones, 400 points put on this morning, and the Russell 2000 is pulling ahead here. The outperformer on the day up 2.2%. I want to ask Kevin Gordon about that later in the program. So obviously it comes as oil is off the highs. We are now sub $90 a barrel. So let's just check out how foreign markets are faring, because we had a much nicer looking session out in Asia overnight with this global tech rebound really taking the baton from Wall Street yesterday and running with it in markets like Korea off the back of its 8% slump. We actually saw a nice rally in that part of the world. We saw stocks in Japan which were up as well, and of course Europe is currently still trading, and for the most part we are looking pretty okay out there, a little bit mixed. Obviously we've got the ECB very much in focus this week with its expected rate hike, but we are looking at a pretty mixed picture across our regional bourses. As you can see here, a little bit of weakness over in the Hang Seng Index. We'll explain why later in the program. A lot of China headline risk today, so we'll unpack some of those stories for you. Let's take a look at where these futures products stand, because as I mentioned, you've got WTI really distancing itself from that $90 a barrel mark, as it does look like there is some optimism around the fact that we are not seeing any further escalation. We're down 4% on crude oil right now. Yields are backing off, but suffice to say, they are still looking pretty sticky at 4.55 here, and it does very much look like the Treasury market, the bond market, is trying to do the Fed's job for it right now, and sending a bit of a message to Kevin Walsh here, particularly ahead of that key meeting next week, where there is a large expectation they're going to be dropping that easing bias. The US dollar index coming off that 100 level we saw yesterday, the Dixie just slipping a bit, but we're still hovering around these 2-month highs. Gold is lower for us, just a smidge here. Bitcoin is back down 62,000 and change. So got red arrows across the board for our futures products. Let's get out to George Sillis, who joins me now, because as we mentioned, we continue to see this rebound in chips today, which is encouraging. Just looking across the sectors, and it looks like breadth is encouraging today as well, George. We had a bit of data out this morning. I was looking at the trade balance numbers, imports, exports, which obviously feeds into Q2 GDP. We're going to be talking a lot about that throughout the program with some economists, but just walk us through your thoughts on the session so far.
Well, it's early to tell what's going to happen near the end of the day, but if you look across the board right now, at the very least, I think crude oil is impacting distribution within the equity complex. Looking at the S&P, you're seeing travel, leisure, hospitality, restaurants like Darden. If you look at some of the cruise liners, Carnival, for instance, airlines higher, Wynn Resorts is higher. So it seems to be discretionary names, travel, leisure, based on crude oil. I think $90 is now a psychological level. If the WTI benchmark futures are trading below that level, that'll probably be very bullish for the discretionary leisure and travel sector. Kind of a mixed bag today too in tech.
Mixed
Apple
bag?
is down. I guess there was some perhaps disappointing aspects to their technology and their conference yesterday. But if you look today, the semiconductor equipment manufacturers are all higher. But you're also seeing some of the optics names like Ciena, Marvell. Those were high flyers as of late, pulling back. But you are seeing, SanDisk.
He just said
the
that
memory
we had a mixed
manufacturers,
bag.
so kind of a mixed bag at least right now.
Oh, he said it again.
But overall, seeing discretionary stocks higher
George.
today alongside information technology is a risk-on
No
environment.
mixed bags.
I did notice too, if you look at the S&P as well, it did reclaim its 20-day moving average. We talked about this yesterday as that being a barrier to price. That's a good sign at the very least right now, with VIX coming down below 18 once again.
I can't be having mixed bags.
The oil market specifically, because it looks like we're reacting to some of the trade data that we've got out of the world's two biggest economies. I mean, I know that some of the exports coming out of here in the US is, obviously this country tries to cushion the blow and really meet some of that demand around the world as far as the outbound shipments are concerned, or one of the drivers as far as prices, but also the fact that, China's imports, we're going to be speaking about that later in the program, actually fell to its lowest level since 2017, and that is being seen really as a buffer with respect to these prices not heading north of 100. Do you have any thoughts on what we're seeing as far as oil this morning? Because it doesn't look like it's reacting so much to the jawboning out of the Trump administration, perhaps more to some of the data we're seeing today, George.
Well, I could reflect, eventually crude oil is going to manifest into, or high crude oil price is going to manifest into slower demand, and that could be the case with maybe consumer goods that are coming out of China.
I love how she says it.
You mentioned. I think if you look, for instance, today, too, when it comes down to wholesale inventories, I noticed that inventories have been building, but the challenge really lies, you'd have to go through and parse which inventory categories are actually rising. For instance, the month-over-month inventory numbers, increased 0.6% versus 0.5 estimated. Last month, they were 1.3%. I noticed over the last few months, they've actually been quite high. But that could be intermediate goods that are going into data centers, because if you look at GDP as revised for last quarter, with the numbers around 1.6%, 1.2% was non-residential private fixed investment spending, and consumption only effectively increased by 0.1% in those numbers. So investment is driving GDP right now, more so than consumption, even though consumption makes up a larger percentage of total GDP. And that's the data center build out. So maybe, again, China's reflecting weaker consumer sensitivity based on high crude oil prices. And that's why I said just a moment ago, $90 may be the new psychological level. If we breach that or below that level, that might be bullish for consumer-oriented, stocks.
Yeah, absolutely. As you mentioned, with some of those discretionary travel, leisure names really gaining today, well bid. Let's just talk about some of the data coming out now, just hitting the wires, the existing home sales. Obviously, we have seen some marginal pickup in recent months. Just wondering if we're continuing to see that trend, George.
Yeah, I do. If you look at the numbers today, at 4.17 million, the estimates were 4.07. So again, it looks like 100,000 increase relative to the estimate, also higher by about 130,000 relative to last month at 4.04 million. It seems like that range between the low 4 million to the high, 4.1 million number has been stationary for quite some time, even going back to effectively late 2022. 6 million was the number in 2021. If you look at the overall trend, stationary trends back then. So existing home sales have been muted because of rates and prices. And so again, there may be some pickup in activity in the home markets because inflation essentially is rising, and housing does reflect an inflation hedge despite the high interest rate environment that financing is essentially not benefiting from, but essentially creating a barrier to home ownership. So the churn rate in existing homes is still relatively low, but it's around 4 million. So a little bit of a higher print this month relative to last.
Okay, I mean, at least encouraging at the margin that we are seeing a slight pickup here. I mean, particularly because this is just not the sort of spring home buying rebound that many were hoping for, particularly when the data points to, you know, sellers obviously having to pull their homes off the market. They're just not getting the price that they want. They're not coming, the buyers, off the sidelines in a meaningful way like perhaps we had anticipated. But George, really appreciate you breaking down the data and the market action for us this morning. I'll catch you later in the day. Coming up, we will take a look at the underlying health of this US economy and what the state of both the labor market and consumers tell us about inflation and the Fed's outlook. Morning Trade Live is back after this.
I'm New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. Think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
We're back on Morning Trade Live. Micron is higher today as the rebound in memory stocks continues here. Goldman Sachs hiked its price target to $900 from $400, keeping its neutral rating on the shares. Meanwhile, UBS reiterated its buy rating and a $16.25 price target, saying it's only a matter of time before the market assigns a more normal multiple once it realizes the changes that AI has created in the entire memory complex. So shares in Micron up 0.8% right now. Let's take a look at some of the leaders here. JM Smucker is up 10% right now off the back of its earnings out this morning. It was a good quarter, a little bit of mixed guidance, but it's been rewarded here today. Interesting name as far as the top of the S&P 500 leaders board for us today, given tech has very much been the momentum trade, and SanDisk is up there, 7.5% right now. Lam Research is not far behind with a gain of almost 6% as well. Let's take a look at some of the losers and the laggards on the session. Dow Inc. down at 2.5%, the Solar down 3%, Workday down 3.7%, Qualcomm is down 4.5% right now. Just actually looking across some of the softwares, it does look like chips are gaining from a bit of softness in that patch as well. The IGB down 0.8%. All right, joining us now is Shelley Antonevich, who's the chief economist for the Investment Company Institute. Very good morning to you, Shelley. Thanks so much for joining us. Just walk us through your thoughts on the underlying health of the US economy right now, given all the data we've been getting.
We've been getting a lot of data coming in. I think one of the most important things that is sort of put a sigh of relief through the markets and through, just participants that follow the U.S. economy has been the strength, this rebound in the labor market. We have seen 3 consecutive months of very strong payroll employment. May came in at 172,000, and we've got March and April revised up to that and above those levels.
Okay.
And then that's being reflected into the steadiness that we've seen in the unemployment rate, holding at around 4.3%. We've seen GDP growth come back in the first quarter, 1.6%. That's resilient consumer spending and an increase, a jump in business equipment spending. And if you look at the Atlanta Fed forecast through they just have April data in hand, so it's early days. They're calling for right now 3% in the second quarter.
Yeah, I mean, do you see any vulnerabilities with that right now? Obviously, another piece of data that we got this morning was those April exports up 2.6%, which does contribute to that overall Q2 GDP, but we're only at the start. And as far as consumer resilience is concerned, I mean, there is a thinking that if this war continues to drag on and inflation continues to track higher, particularly with a 4% handle tomorrow, then we could potentially see a little bit of weakening. I mean, do you think we can hold up at that average kind of 3% expectation for growth this quarter?
How that 3% Atlanta Fed estimate is going to evolve. It certainly does depend a lot on the import-export numbers, and I would expect that number to come down today when they update the new forecast, when they incorporate that data. I think also one key thing is how consumer spending is going to evolve over the next few months here and over the rest of the year. And certainly inflation is playing a role in that. We have very little data on consumer spending so far right now. For May, it looks like year over year, retail sales at independent stores are up 4.4%. That's great. And even after you consider prices, which for those baskets people were buying, prices were up 2.3%. So you're still seeing some real gain in sales on that. Now, that said, we've got consumers with ever higher credit card balances. The Fed just published credit card data, and we're seeing a 10% increase in revolving credit. That's going to wear down. People are dipping into their savings to fuel some of their spending or maintain their spending patterns. When BEA published their data, we saw the lowest personal saving rate in about 4 years. So how sustainable that is going forward, that is a question. Certainly, we've seen a temporary bump in consumer spending from higher federal tax returns, but that could certainly be waning right now. And consumer confidence, if you look at consumer confidence in the economy, that measures sort of the overall economy, how they feel about the overall economy. And they're pretty, okay about it. It took a little bit of a hit, but it's not down. Consumer sentiment, on the other hand, which measures their individual personal finances, how they feel about that, that is the lowest it's ever been since that metric was tracked in 1952. So there is a lot of uncertainty out there, and the consumer outlook is very murky right now, and higher elevated, especially if energy prices remain elevated.
For sure, and as you say, there is a worrying subtext beneath the consumer resilience that we're seeing at the headline. We'll get more information in the next 3 trading days here, Shelley, but I just noticed that you're at your annual ETF conference there on the ground. I'm just wondering what sort of the talk of the town is this week. Are people talking about inflation and the Fed? Is it all just about technology?
I think right here for the ETF conference, it's about the spectacular growth we've seen in ETFs. This is ICI's second conference, and we've got 1,000 registrants here from the ETF industry. So they're all, looking, ETFs are growing so much. We're going to be publishing data today, and year to date, we have over $800 billion that's come into ETFs. And U.S. households are a big part of that. 20 million US households own ETFs, and we are estimating that about half of the assets are held by US households in ETFs.
Yeah, it's interesting. I mean, so many interesting threads worth pulling on. I mean, particularly when you look at the ETF market. I mean, particularly given the traction that it's been making. I've been looking at these thematic ETFs like DRAM, which is obviously trying to capitalize and take advantage of, you know, that incredible growth we've seen in some of the memory stocks. But I know you've also been talking about also how young people, especially young retail investors, make up for such a great portion of some of the investments in ETFs as well. But I'm just wondering from a macro perspective, if you can keep on both hats for us, Shelley, you know, what people are thinking about as far as, you know, interest rates, higher inflation with a CPI print tomorrow. I mean, how are people thinking about investing with all of that in mind? Because, I mean, it just seems to be like a two-track economy right now. All the investment, the AI growth, yet, as you mentioned, some of the warring underlying trends beneath the surface here.
Certainly inflation is playing a role. I mean, as you noted, CPI was 3.3%. We're going to be getting in April, we're going to be getting the May print. The Cleveland Fed nowcast is calling for an overall of over 4% year over year in CPI. We had the producer price index come out recently, and that's showing accelerating sort of price inflation in business inputs and wholesale prices. That was 6% year over year overall, and the core on the PPI was 4%. So when you look at these all together, you know, it's not surprising that the market is anticipating or flashing sort of signals that there's tighter monetary policy ahead. So, you know, it wasn't that long ago we were talking about potential interest rate cuts by the Fed. That's gone now. People are looking at a very strong labor market. They're looking at inflation that is just so far from the Fed's 2% target, so that the upcoming meeting next week has zero odds of a rate cut and almost 100% probability, at least in the market, of the Fed standing pat. And if we're going forward from there, the market is priced in actually 225 basis point hikes in the Fed funds rate. So one by the end of this year, and then another with fairly decent probability by June of next year.
Yeah, and there's a big expectation they are going to be removing that easing bias come next week as well. Shelley, really appreciate it. Enjoy the rest of the conference. We'll speak to you again soon. Shelley Antonevich there, Chief Economist for the Investment Company Institute. You're welcome. Coming up, we will get a closer look at the big picture with the team from Charles Schwab. Morning Trade Live. We'll be right back.
On the floor of the New York Stock Exchange, when markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going?
First day, so sometimes, you know...
Next.
Try it again. You could have done better. Please. Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in prep.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
We're back on Morning Trade Live. Keith Briette has upgraded Toll Brothers to outperform with the market perform and raised its price target to $161 from $158. The firm said the upgrade reflects Toll's exposure to resilient, they quoted, luxury demand, its long land inflation hedge, and improved fundamentals after its second quarter earnings report. Toll Brothers is up over 25% year over year, currently trading up 6.5% right now on Toll, 145 and change. Welcome back to Morning Trade Live. It's time now for the big picture, so let's welcome in Kevin Gordon, Head of Macro Research and Strategy, Schwab Center for Financial Research. Very good morning to you, Kevin. So nice of you to join us. You know, I was just speaking to an economist in the previous segment. Q2 GDP tracking at 3%, although the Atlanta Fed might adjust that based on some of the import-export numbers we got out this morning. But it's really been on a lot of that consumer resilience. I know that you and Lizanne have been talking about that, but you've also been talking about the potential vulnerabilities. So how do you see growth evolving over the quarter?
Yeah, you know, I think for something like the nowcast from the Atlanta Fed, you could probably expect the next iteration of that to go up just a little bit because exports were stronger than imports for the most recent data point we got this morning. So it's certainly helpful for the growth profile for the export-import differential. I think that, you know, in terms of the consumer spending portion of GDP, which is probably the main thing to focus on for the second half of the year to the extent you're going to see some weakness. There's a couple of aspects of this, some good, some bad. I think to start with the good, you know, we've had a pretty resilient labor market. Over the past 3 months, you've added close to 600,000 jobs and you've seen the unemployment rate hold relatively steady, all while you're not getting a significant amount of wage pressure and wage inflation, which is ultimately good for the inflation backdrop. But of course, the flip side of that is that you do have the consumer increasingly under strain. Real wage growth has slipped into negative territory, probably going to be the case for the second month in a row when we get CPI tomorrow. And the fact that that's probably going to at least incrementally chip away, I think, at the potential spending power for consumption in the U.S. That's not to say that the personal consumption expenditure component of GDP necessarily flips negative and is a drag on GDP for the second half of the year, but it's certainly exposing some of the fragility around consumption, at least the risk of fragility around consumption that exists for the second half of the year. But for now, for the most part, that is sort of overshadowed by what is still a very healthy business investment environment and capital spending environment, of course, primarily driven by what's happening with AI CapEx.
It's interesting how we've gone from this sort of low hire, low fire type of mantra to, I know that Ed Yardeni pointed out earlier this week, the hires exceed fires economy now, particularly because of the strength we've seen coming through that labor market data. Is it as strong as it appears on the surface right now, Kevin? I mean, how many months of this kind of data would you and the team need to see to be convinced that things have stabilized?
Well, it's not necessarily the number of months as it is, I think, the totality of the data. So if you look at, non-farm payrolls, which is, of course, that's the headline payroll statistic that we get when you see the jobs number come out every month. That's the one that has been strong, and that is, I think, what Ed is probably referring to in terms of the hiring exceeding the firing. I think you need to sort of look at the broad set of data, whether it's the hiring rate from the job openings data that we get, or whether it's the household survey, which we get in addition to the establishment survey when we get the non-farm payroll statistic. Household employment over the past year has been weaker, so there's been more of a divergence between those two statistics, not necessarily signaling, I think, a bad omen for the economy, but it's still kind of giving us this indication that, yes, while things have stabilized in labor, you're not necessarily going through this full-blown reacceleration and you're not in this hiring boom. I think we're still a ways off of that, especially because the small business data that we got this morning from the NFIB for May hiring intentions fell even lower. They're at their lowest since 2020. So again, you're not seeing, I think, this full-fledged hiring boom take shape. But at the same time, I think that that's still a fine environment to be in, especially in this current environment. You don't necessarily want, as weird as it may sound, you don't necessarily want, I think, a full-fledged hiring boom, because that would lead to maybe a tighter labor market that would lead to more inflationary pressure. Not necessarily what you want in an environment where inflation pressure is also looking, pretty broad right now.
I always love looking at your X feed because you put up so many interesting charts which tell so many great stories. I particularly like the one you've just put up about an hour ago of US imports of semiconductors giving meme stock vibes right now. I mean, 35% export growth from China. A lot of that was obviously chips. Really says it all. I'm going to be breaking down that data later. But something that also caught my attention this morning, Kevin, was the fact that the Russell 2000 value is outperforming the NASDAQ. Just talk us through that.
Yeah, the small cap dynamic and how it's changed, over the past several months, and you can actually sort of take this back to earnings season at the end of 2025, where a lot of the earnings profiles and forward earnings estimates for small caps, they started to turn, and that really was a differentiator in that part of the cycle relative to the past several years. Every single time you were getting this little bout of small cap outperformance, it really wasn't to be believed or sustained because you weren't seeing it backed up by fundamentals. So this time there has been more of that fundamental underpinning, and I think that's one of the reasons, or maybe the key reason, that you're seeing more of this outperformance down the cap spectrum. I think the other way to think about it and look at it is that when you think about all of the stress and the volatility that we've seen year to date, if you kind of take the big picture zoomed out version and look at markets just year to date, you do have outperformance from an area of the market or from a sector of the market that doesn't necessarily, that investors don't necessarily think of when they think about performance so far this year. So much of the focus has been on big tech and semiconductors, and yes, they have been the top performers off of the rebound, but investors, not all investors are thinking only in terms of the March 30th low. Some of them think longer term. Hopefully most of them think longer term, and in this case, if you're thinking about long term being year to date, you do have pockets of outperformance down the cap spectrum.
Yeah, it's encouraging, particularly when you look at the charts, because of all the earnings growth we've been talking about and the concentration risk associated with that. But as you say, I mean, there is a trade apparently outside of AI, or maybe a lot of these small cap companies are sort of adjacent ways to play that entire theme as well. So obviously we're seeing some of that too. Really appreciate the insights. Thanks so much for jumping on with us, Kevin. As always, Kevin Gordon there, Head of Macro Research and Strategy, Schwab Center for Natural Research. Coming up, it's time for the morning trade. We'll take a closer look at Apple and this reaction to the company's announcement at its WWDC conference yesterday. Morning Trade Live. We'll be right back.
Stay connected. Download the Schwab Network app and stream live coverage wherever you are.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
While others recap the news,
looks like it.
Read between the lines, from what's moving markets to what's next, with sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall, and connect with me on LinkedIn for more.
Maybe, maybe not.
We're back here on Morning Trade Live. Let's focus on Apple. The company kicked off its annual Worldwide Developers Conference yesterday in California as Tim Cook delivered his final keynote as CEO. And we did see a pullback off the back of that announcement. There had been some perhaps concerns that maybe Apple did not deliver, although some would argue that it very much did on their promises. And so we're continuing to see some declines here in the market. So not a huge amount of fireworks as far as the stock reaction is concerned, although we do have some analysts turning more positive, more bullish on this name. So let's talk about the reaction now with Marley Caden, as always. Marley, you and I were talking about this yesterday, fresh off the back of Tim Cook's announcement here. And and him obviously taking the stage. And we were talking to that tech analyst who said, look, there is a difference between what Wall Street wants and what consumers want right now. We're seeing the reaction from Wall Street again today. Just walk us through what some of the analysts have to say.
Yeah, thanks, Sam, and good morning. Before we get to the analyst commentary, I want to run through just some of the updates that we got in that keynote, the last of Tim Cook's, just so the context makes sense here. The keynote presentation focused on three things: platform improvements, updates in trust and safety, which was a big one, and what they called a big leap forward in Apple Intelligence and Siri. Those were the three main pillars of the presentation. The big focus, of course, was on Siri. It was mentioned actually more than 100 times in the 90-minute presentation. Siri was said 102 times over that time frame. The rest of those AI features have been implemented broadly across Apple's ecosystem in iOS and iPad OS and Mac OS, Watch OS, and Envision OS. The slate of new software upgrades are going to arrive in the fall. Apple's AI models will be integrated with Google's Gemini to enhance the conversational ability and contextual awareness of all of the apps. That means that Apple's apps that use AI, which goes beyond Siri to include Mail, Messages, Safari, and Photos now, will have a better understanding of what you're trying to do and will be better at delivering results that feel meaningful. These AI-powered features will be accessible in some way on all of Apple's devices across the entire device suite, and it will also be able to peer into what's stored on your devices, what's on your screen, and also what the camera is seeing to answer questions, generate text and images, and perform the basic tasks that you ask it to do. Also important to note, these AI features will not be available in the European Union or in China. They'll be just rolling out in the U.S. The company says it needs to sort out some regulatory hurdles to keep those privacy features intact. But when it comes to Siri, Siri has now been rebranded Siri AI, has a dedicated app called Siri AI, and Apple says it's a, quote, profoundly more capable assistant now, meaning it can do a lot of things similar to what Gemini or Claude have been able to do for a while. Siri is chattier, can grasp context now, and is able to integrate with other services. They also say Siri can pull from broad world knowledge as an online source, as well as going through your personal data that you have stored in your phone. So a lot more context when working with Siri now. You can ask it follow-up questions without having to reference your original question. It can access apps to draft messages. It can gather photos and videos into a share folder for you. It can tell you how to get tickets to events. It can pin things to your calendar. A lot more capabilities. Also, you can use your camera now with Siri AI. You can point your camera at it on your phone or your computer or your iPad, and Siri will tell you what it is and give you web results.
1, 2, 3.
So another really new feature there as well. As we expected, we also got a new iOS. The beta version and the public beta version will be out in July as normal. Apple usually releases those in July. It will be available on any phone from an iPhone 11 onward. And this is a big deal for longevity, Sam, because oftentimes they make them only available for more recent phones to force that upgrade. They did not do that here. As far as its capabilities, they say it'll be 30% faster. Photos will pop up 70% quicker, and AirDrop is going to work 80% faster. But let's talk about the analysts. Barclays keeping an underweight rating and a $253 price target, which is about $40 below where we are. And as you highlighted, there's some discrepancy about what the street wanted and what consumers want. In this case, Barclays says that it was interesting, though not necessarily transformative, and said that the updates are incremental and not enough to drive an upgrade cycle.
Good enough for me, baby.
Raised their price target to $360 from $330, keeps an overweight, said that the WWDC illustrated clear progress on their AI roadmap and suggested an earlier monetization opportunity than we expected. They also added
SPX 460, now they're at 550.
UBS keeping a neutral rating, a 296 price target here.
Yep,
they say
I did that.
Apple AI-related announcements with privacy overlay were very important. They think they're additive to the user experience. So again, back to what the consumer wants, but do not expect them to be a material driver of iPhone demand until we get the potential launch of that foldable iPhone in September. And JP Morgan, the last one, they said that they delivered the expectations of this completely revamped Siri. It was very important they did that. They highlighted potential monetization path. And premium users will be bundled into iCloud tiers. They're keeping an overweight rating. So a bit of a mixed picture here as well, but kind of like you highlighted, it depends which perspective you're looking at. Is it what Wall Street wanted? Is it what the consumer wants? Or is the balance the answer?
Yeah, absolutely. And it remains to be seen. Does this make people want to go out and upgrade? I think that's obviously what's everybody's watching right now. And shout out to Australia as well. Apparently Tim Cook actually called Prime Minister Anthony Albanese and said some of those safety controls for children were inspired by Australia's social media ban. So hats off there. Very interesting. Marley, thanks so much for breaking down all the details on the analyst reaction. Let's trade Apple now with Tim Bigham, option strategist over at Pilot AI. Tim, very good morning to you. How would you approach an example trade? I mean, this one had a pretty good run up into this event. It's come off now.
Yeah, absolutely, Sam. And this is a stock that kind of delivered what it had to deliver, no more, no less. And I think that's reflective in the price action of the stock. Yesterday, we saw it trade up towards those all-time highs again around the 315 area, but get hit hard, close lower, and then today certainly getting a little bit taken out to the woodshed as maybe everyone a little disappointed there wasn't more to the announcement going forward. So I think I'm using that 315 area. The market kind of told me by the price action to sell out of the money call spreads here, position to be a seller as it nears all-time highs as it does, but being somewhat richly rewarded, given that IV is still somewhat elevated in Apple, certainly the valuations continue to be elevated for a $4 trillion plus stock. Price to sales still over 9 times, right? PE ratio about 35 times. And this is for a multi-trillion-dollar market cap stock with interest rates not looking like they're going to head lower here. So I think on all fronts, we may have seen a short-term top in Apple here over the past couple days. And I think we might have seen a short-term top perhaps in AI generally, as a little bit of AI fatigue, in my opinion, is starting to set in the market.
Tim, really appreciate it as always. Thanks so much for the example trade on Apple post this announcement from Tim Cook yesterday, option strategist over at Pilot AI. Moving on, and coming up, we will take a closer look at the sectors on the move this morning in the international headlines as well. Morning Trade Live is back after this.
Morning. Find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis, Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Back to Morning Trade Live. I'm Sam Vardas coming to you live from the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets this morning. Alex Coffey joins us from Chicago. We're off the highs now, but still looking to go for back-to-back gains here. Alex, walk us through what stands out.
Yeah, we've talked a lot about in recent weeks, Sam, the importance of IT. Maybe it goes without saying, but with IT a little bit weak today, it's not a surprise that even on a really strong market breadth day, that it's a little bit of a battle here. If you look at the S&P 500 heat map as a visual representation, you're going to see a ton of green on the screen today. Over 75% of stocks are higher. It's a meaningful improvement from yesterday, where declining stocks actually outweighed gainers by about 2 to 1. Today, advancing names outpacing declining names by about 3 to 1. So way more of the screen is green, but there's weakness in the most important areas of the market from a beta standpoint and from a momentum standpoint. And then, of course, Apple just contributing quite the drag today with its near $8 decline.
Yeah, absolutely. As you say, the Mag 7 seems to be dragging today. I do also see some of the chip stocks have dipped throughout the course of the session. So a little bit of a different picture within the IT sector to even we were looking at about an hour ago. Just walk us through your thoughts here, because we are seeing softwares under pressure as well today.
Yeah, software is certainly under pressure today. It has been throughout the session. Also, IT broadly, when you look at the hardware components, a little bit more mixed. So Apple's certainly under pressure. NVIDIA's been under pressure for much of the day. But some of these suppliers, the Lam Researchers of the world, they're doing just fine. And those are the small green boxes you see in the bottom left-hand corner. So it's mixed within IT. It's not the worst performing sector, but it is down 1.2%. And with IT dragging that much, it's really difficult for the market to maintain any type of intraday gains. And as you look at it in real time, we're basically unchanged in the overall market.
All right, Alex, thanks so much for the breakdown of what we're seeing beneath the surface here. Let's turn to some international headlines now. There's been a lot of news flow out of China. The country's exports jumping 19.4% year over year in May. That's better than April and higher than expectations. Outbound shipments of chips surged 110%, partly driven by higher prices. Goods to here in the US grew 35%. That's the most in over 5 years. It follows months of double-digit declines in exports to the US, largely because of tariffs. Imports, which are a key indicator of domestic demand, soared 27.4%, also beating forecasts and better than April. But don't be fooled. Analysts say this has been driven by higher input costs and chips rather than a sign of rebalancing. China's oil imports, for instance, have hit the lowest in more than 8 years, which is partly what's acting as a buffer preventing a big spike in these oil prices. Taiwan is reportedly weighing stricter export controls on chip sales to China to further align itself with the US. According to Bloomberg, the move is to try to address diversion of hardware like servers with NVIDIA chips to China. This could reportedly restrict sales to all customers in China, including Huawei, and would allow Taiwan to prosecute smuggling to China as a criminal violation for the first time. And we're watching shares in Baba, Baidu, and BYD this morning after the companies found themselves on the Pentagon's list of entities it suspects it's helping the Chinese military. The Defense Department updating its list yesterday evening. It now means it's banned from working directly with the companies and buying from them. Analysts say the inclusion is more of optics than a substantive problem for these firms, and that's perhaps why the ADRs are shrugging it off today, all higher across the board. Coming up, it's time for Inside Out. We'll take a closer look at Ford and Tesla and bring you an example trade when Morning Trade Live returns.
You know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
My parents didn't really talk about money at all.
Looky.
In college, everybody around me had money. I didn't want anybody to find out.
I don't want to be like you.
Middle class. I was using credit cards to do anything and everything. I ended up with $20,000 in credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
I don't want to do it.
Real
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects.
Chewy.
Watch live. Subscribe.
CHWY. Pull up the yearly. Boom, boom.
Sometimes, you know, you could have done better.
Market's being a little sluggish today.
Same goes for where you invest. Level up and invest smarter with Schwab.
So we're going to go to the weekly time frame. It's very vital that we do that at this stage.
Let's take a look at the automakers this morning. It's a mixed picture. We've got Ford higher by 0.7, but the rest are lower. Tesla's down 1.5. You've got General Motors down 0.6, and Rivian getting hit the hardest, down 5.5% right now. So we're all over the shop with respect to our automakers in trade today. And of course, this does come as oil prices have been coming off. Discretionary has been performing quite well. Let's go inside out on Ford and Tesla specifically. Joining us now is Carl Brara, who's the executive analyst at iSeeCars.com.
Stop spreading the lies.
Nice to see you. Let's talk about Ford. Is this becoming an energy company?
No.
I think they're looking into that possibility, and it's pretty wise of them too, because we know that, you know, automotive sales have been challenging, especially on the EV side, which a lot of people thought was the future. And
no, I didn't think that.
To prepare for that, but now they're able to take a
no,
lot of
that's
the same
bull
resources
crap.
that would give them battery production capacity and leverage that for energy storage.
I disagree.
Which is going to be huge as we build up more of these AI centers and we need to power these things. So Ford turning to the energy sector and the AI sector is what's been leading that stock up for the last couple months, and I think it's a smart reallocation of resources.
And what about the war in Iran? I mean, how has the higher oil prices picture and situation here changed the way that some of these companies are thinking about their EV future? I mean, particularly when it comes to Ford.
I think for the domestics, it still remains a very heavily, you know, gasoline or maybe hybrid-oriented marketplace, even with the higher oil prices. And we're really kind of seeing this bifurcation of the new car market, where a lot of people, it's just out of their price range. Affordability is a real challenge, but then there's still a component of the population that's got a lot of money, they're wealthy, and they're still buying relatively large trucks and SUVs, which of course are the largest profit drivers for all the domestics and a lot of the imports too.
But in saying that, Tesla's numbers have been looking more encouraging lately. I mean, particularly in markets like Europe, where it had a really tough time in 2025. I know that it continues to face stiff Chinese competition, but how are you thinking about Tesla's sales right now?
Very good.
It's encouraging to see them rebound as they have in the last few months, and it shows that, you know, they're not on a kind of permanent slide like it looked like maybe they were for a while. But as you mentioned, they're still losing market share in other markets to China. They just can't compete on a lot of the pricing there. And, you know, this idea of just continuing to grow and double vehicle sales every couple of years, as Elon had predicted a few years ago, everyone knows that's just not going to happen. So it's really down to self-driving, robotics, AI. But I think the company's also been looking, you know, like they're making progress in those areas, and that's helping the stock, or has been helping the stock.
Oh, absolutely. But at the end of the day, while it is very much looking at a robotic and type of AI future, I mean, at the end of the day, I feel like a lot of people say it's still being valued as a car company. Is that how you see it?
Yep.
I see it as a car company that is showing more and more promise of transition into something larger, and you know, the potential for immense growth and financial benefit in the robotics and self-driving area is huge.
Correct.
And it's really just down to timing, as well as, of course, competition. They're not the only ones playing this game, so Elon can't control for the competition, whether it's China or other U.S. companies. But I think Tesla's going to play a critical role in those areas, and it's really just going to be down to his timing and his execution.
Okay.
Yeah, and obviously it's going big in the energy storage business as well. I mean, obviously a small part of it, but certainly gaining traction. I mean, who do you think's better positioned? I mean,
I am, baby.
For them to sort of share the love, you know, as far as all these aspects with respect to cars and the AI build out as well.
I think there is. I think there's going to be plenty of demand for energy storage, and I think all the car companies should be looking at that, and probably are. We see Tesla's been working on it for years. Now Ford's jumped in. I'll be shocked if we don't see more automotive companies announcing something along these lines, because it is an area that shows a lot of growth. And don't forget profit margin too. I mean, car companies, they always struggle with profit compared to tech companies and a lot of other sectors. But you look at like Amazon's, Amazon Web Services, it's a smaller part of their revenue, but it's a huge part of their profit. And I think it'll be the same for car companies if they can get into it.
Yeah, you raise a really interesting point, and it certainly makes sense as far as what we've seen with respect to Tesla and what it's doing here. Ford as well, watching that stock. Really appreciate it, Carl, as always. Thanks for the breakdown, Carl Brower there, executive analyst at iSeeCars.com. Let's trade Tesla now with Tom White, host of Fast Market. Good morning, Tom. Walk us through an example trade here.
Yeah, I think if you take a look at the stock, it's starting to consolidate here a little bit. It's down nearly about 10% so far this year. Still off about 18-19% from those all-time highs that we saw last December, but you're starting to see some consolidation. I looked at a strategy that gives you a directional bias, but you can be a little bit more passive, maybe a little bit more conservative, taking that stance, just because this is typically a pretty volatile stock. So if you're neutral to bearish on it, this type of strategy works out because it gives you a higher probability of success. So we're not to the June 18th monthly options that expire in just 9 days. So this is really short-term positioning. This is one of those strategies you can do over and over again if you think a stock is going to remain below a specific price over a specific time frame. So going out to that June 18th monthly options, sell the out of the money 425 strike call. And then because this is a volatile stock, we're going to buy the 435 strike call against it. So we're short, $10 wide neutral to bearish call vertical. You're going to collect roughly, I've got a 250 credit on here. That's where it was trading earlier. Stock has fallen a little bit. Probably collect around $2 now, but the credit you collect on this type of strategy is what you can make. So you can make potentially about $250 on this with about $750 in risk. It takes your break even all the way up to $427.50 to the upside if you collect a 250 credit. That's over 5% above the current share price. So you've got that big cushion to the upside. The probability that that short 425 strike that you're selling in this put or call vertical is going to be out of the money at expiration is over 70%. So you profit in 3 out of 4 scenarios on this one, Sam. If the stock goes lower, stays where it is, or even goes higher, but remains below that break even, just above 427 to the upside. So playing the probabilities on this neutral to bearish short call vertical.
All right, good stuff. Really appreciate the example trade on Tesla for us this morning, Tom. We'll let you go, and we are looking at these markets losing some altitude right now. We're even seeing some of those chip names, which were in the green about an hour ago, turning into the red. Micron's dipped 1.6% right now. You've got names like Intel, AMD, Broadcom, all lower. Most of the Mag 7 are dragging for us right now. Software is under pressure, and so the S&P 500 taking a turn within the last few minutes here. So has the NASDAQ 100, not managing to hold on to those gains. We'll watch this throughout the course of the day for you. Thanks for joining us here on Morning Trade Live. I'm Sam Bartis. You've got Trading 360 up next with Marley Caden.
Checking. The checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
We're 90 minutes into the trading day. Welcome to Trading 360. I'm Marley Caden coming to you live from our Chicago headquarters. We've got a great show in store for you today. First, we're going to spotlight the global supply chain and how the Iran war continues to weigh on the shipping economy. Our disruptor today is Texas Instruments. Wells Fargo lifting its price target and eyes humanoid robots as a potential growth driver for the stock and other analog chip makers. Then in our 360 round, we will dive into the state of the consumer, and we'll have what we've learned from this quarter's major retail earnings and also what we can expect from Restoration Hardware. Let's take a look at how the markets are faring as we start this day. Mixed picture today. The S&P trading down about 1/4% at 73.8968. On the NASDAQ, we're 0.75% lower at 29,191. The Dow is 0.25% higher. We're at 50,919. And the Russell 2K is at 2870. That's up about 0.5% this morning. On the 10-year, we're pretty much flat. We're at 456. The dollar is at 99.80. For gold, we are lower on the day. We're at 43.2410 a troy ounce. Crude oil has fallen below the $90 a barrel mark. We're at 87.87 right now. And Bitcoin continuing its slide. We are now down to 61,525. That's 3% off of where we were yesterday. Do you want to welcome in Alex Coffey, though, our first guest, to talk about an IPO, another IPO, when we've been expecting here, but OpenAI confidentially has filed for its IPO. So what do we know?
Yeah, so they submitted an S1 with the SEC. They're apparently working with Goldman and Morgan Stanley. Now, a potential listing is fluid, but it's potentially as soon as this fall, but there's nothing finalized on that front. And the company says it could be a while just simply because they're weighing the benefits of, just remaining private for a little bit longer. They are planning a tender offer, though, amongst their employees to provide some liquidity pre-IPO, kind of shore up the shares that they could bring to the market as well. Should note that you mentioned that IPO, AI IPO pipeline now is about 3.6 trillion in value. We know the big one later on this week. Anthropic also is just shy of a trillion on its last round of valuation. And of course, OpenAI was last valued about 852 billion. So assuming those would inch up, you can see where these numbers get very big very quickly. It also sets up a situation where you look at ChatGPT, which really sort of launched this boom. As of February, it had something like 900 million weekly users. It had 50 million subscribers. They are targeting 1 billion in weekly users as well. But reportedly, they started to miss some of those internal, revenue and user growth targets. So there's a little bit more concern with that increasing competition from Anthropic, from Google's Gemini that are weighing on this space. And whether it's Anthropic or OpenAI, one of these names would potentially be the first truly all AI-focused mega cap like tech company, and that makes them unique.
Yeah, it certainly does. And how much of the timing here, this isn't so much an analyst question as just a thought question from you as you follow the market so closely, has to do with the lawsuit with Elon Musk having now been resolved. I mean, they were in this lawsuit. Jury in California finds that Elon Musk filed it outside the statute of limitations. Not that it wasn't warranted, just it wasn't filed appropriately. So now they have that overhang gone, and now we've got this S1 just in the weeks that follow.
Yeah, I mean, surely it was an overhang, a cloud. I'm not a legal expert, so I can't say if there was actual like legal impacts to preventing them from doing that. But certainly, whenever you have negative press around things like that, it's not going to help. That said, though, could be again one of the largest IPOs in history. But also, because it's just a pure play into AI, if they aren't hitting those targets, it's going to be a little bit more potentially volatile in terms of how it's received, just because it doesn't have other businesses to fall back on like so many of the other mega caps do.
Yeah, it certainly will be very interesting to watch as we have these 3 IPOs potentially coming our way by year's end. No date on this one, but Alex, really appreciate you taking us through that for OpenAI and their confidential filing that they put in with the SEC. Do want to broaden out our conversation, though. Welcome in our next guest. Joining us now, Kieran Osborne, Partner and Chief Investment Officer at Mission Wealth. Kieran, great to have you on the show. Now, we had a rebound off of Friday's lows yesterday. Today, we've got a bit more of a mixed picture setup as we wait for our inflation data. What are your thoughts on what we're seeing in the markets right now?
Yeah, I think, right now, it's sort of a bit of a wait-and-see mode. What we're seeing in terms of economic data is better than anticipated. Numbers have come in. We saw on Friday the very strong payroll data underpinning basically a pretty robust labour market, which in turn is really underpinning strong ongoing consumer spending data as well, which really underscores the economy. So I think right now all eyes are on what's happening with respect to the Middle East as it pertains to inflation. The longer that the conflict continues and the longer energy prices stay elevated, the larger the impact is ultimately going to be on inflation, and really that in turn is going to make the life of the Fed much more difficult in terms of deciding which way to move interest rates on a go-forward basis. So I think we're really in this sort of wait-and-see mode, although what's really been driving the market more recently is better economic data and then clearly a very, very strong earnings season.
Yeah, certainly, and the backdrop to that is also what you highlighted here, is that we have inflation concerns because we have these elevated energy prices, although I did just highlight that the barrel of oil is about $87 now. We've dropped below that $90 mark. But the question is, how much is that going to ripple through the economy, right? When does this end? And we seem to be very resilient because of things like earnings and this better than expected labor market data that we've gotten. What's your expectation for the Fed going forward? And also, how much longer can we sustain this rally with the backdrop that we may get a potential significant uptick in inflation?
Yeah, I think I'll start with the Fed. I think the Fed right now is in wait-and-see mode. They're really sitting, awaiting further economic clarity with respect to what happens within the Middle East and what happens with energy prices. Obviously, we have upward pressure on inflation, and the market is now pricing in expectations for at least one rate increase this year. We don't think the Fed is going to increase rates over the near term. I think they are in this sort of wait-and-see mode. They have themselves said that current interest rate policy is somewhat restrictive. I think they want to get to their longer-term neutral rate, which would be about plus or minus 3% on the Fed funds rate. That implies 2 to 3 interest rate cuts from here. I don't think that's happening anytime soon, but I don't also at the same time think that interest rates are likely to head northwards from here. I think in terms of the market implications, it's clear that earnings have really been driving the price action recently. I think one favorable development more recently is that what we've seen is that despite appreciation in stock prices, the the stock market hasn't actually kept pace with the growth in earnings revisions, meaning that valuation multiples have actually contracted year to date, despite the strength in the broad market. That's a healthy development, and we're also seeing much more broadness in both earnings surprises as well as earnings growth rate, across various sectors. It's not just mega cap tech names that have been driving the market this year.
Yeah, we have seen a lot of that rotation this year. So knowing that we have that as our backdrop, and you also mentioned that we have actually seen some of these valuations come down despite the strong earnings that we've seen here, how important is diversification right now, and how are you approaching that with the macro backdrop that we have right now?
Yeah, it's a great question. I think diversification matters more than ever right now. What we've seen this year is a significant divergence across asset classes, across sectors, investment styles, in terms of performance, both year to date, but then intra-year. Like the first quarter of the year, growth significantly underperformed value. US underperformed international emerging markets. Large caps underperformed small caps. And then what we saw as we came out of the sort of market bottom towards the end of March is through April, May, growth significantly outperformed. The Mag 7 names bounced back significantly. US outperformed international, large outperformed small. And then more recently, we've seen again that relationship sort of divert again, and Mag 7 starting to lag relative to the rest of the market. And so, what that means is and on top of that, the market still remains extremely concentrated. So, our position is broadly diversified portfolios matter more than ever, and a disciplined approach to rebalancing can add value in these time periods where you get divergence in returns, you get some uptick in volatility. That enables us as asset managers increased opportunities to buy low and sell high, which is really what our approach to disciplined rebalancing forces us to do. And that's proven to add value over the long haul for our clients.
So as you try to do this for your clients and as you try to rebalance depending on what the market performance is, can you give us some examples of where you might be trimming for your investors to create some strength in areas that may be lagging that you're reallocating from?
Yeah, I mean, earlier in the year, what we were doing leading into this year, actually, we were taking some chips off the table with respect to some of the Mag 7 names in particular for those clients that had, maybe they were a little over their skis with respect to their stock concentration there. We were trimming growth names in favor of value, which at the time had relatively underperformed. More recently, we've actually been trimming some value names in favor of growth and leading into the bounce back more recently. We've been taking a little bit of chips off the table from international in favor of US, just based on the significant run-up in international stocks relative to US more recently, albeit we still view international stocks very favorably on a go-forward basis.
And as we look at U.S. equities specifically, going into the second half of the year with the setup that we have right now, where do you see the best opportunity for an investor who wants to stay invested here but also wants to manage risk because of that uncertainty that we've talked about?
Yeah, one of the areas that we've focused on a lot is actually in private markets. So we really like private equity as a good example where, on a go-forward basis, we do believe that private equity historically has produced a liquidity premium consistently over and above the broad stock market. We do anticipate ongoing bumps in the road as part of the course for the public market, and expectations should really be reset, I think, for more moderate returns for public markets. Meaning we just don't think that valuation multiples are going to drive increased returns going forward. PE multiples have come in a little bit this year, despite the strength in the broad market, because earnings have outpaced the price appreciation. But we don't anticipate that PE multiples expand from here. If anything, there's probably a greater risk that they contract. But let's just say that they stay static. That if you take that effect out of the stock market from a long-term returns basis, you end up with about a high single-digit expected return profile, which I think is fair on a go-forward basis, with some volatility along the way. In private equity, we have high conviction in private equity and other private asset classes, private real estate, for instance, private lending too. But these asset classes have a very real chance of outperforming a high single-digit return target, which we expect the public stock market to produce on a go-forward basis.
Kieran, really appreciate you being with us this morning and for the insight. Kieran Osborne, partner and chief investment officer at Mission Wealth. And don't go anywhere. We've got a lot more coming your way today. We've got the big three next, 3 stocks and 3 charts for you. Rick Ducat will take us through the technicals. Jessica Inskip is joining us to take us through her picks today. Apple, Oracle, and NVIDIA. That's next on Trading 360 on Schwab Network.
Snake breakout pullback. Oh.
Trading
That was pretty good.
floor in the world. This is Opening Bell with Nicole Petalidi.
Thank you very much.
Live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute by minute breakdown of the biggest
I thought they were just
headlines,
joking when they were
earnings,
talking about the
global
famous burp.
numbers, just the trades
No,
that
it's a
matter.
serious
As the
serious
bell hits
thing.
and the markets react in real time.
Yeah, they come in Missouri,
Live at the NYSE right when it
different
counts.
sizes.
She looks like you, Dad.
Aw, she's got your smile. Carl. Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
Schwab helps me generate retirement income. All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Schwab is
Too
powered by
private.
Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone,
Right back.
and in-platform.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this
She's
person
very
in our
vulnerable.
family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
During COVID. Those who are already making investing content at that time gathered market share. The Fed started raising interest rates, and that's why those high yield savings accounts were more attractive. So when the Fed started going down an easing path, high yield savings accounts rates were going down because it affects the front end of the curve, and that's what those are tied to. Influencers didn't know why. And then they would say, well, I'm the expert. If anyone can tell you why interest rates are changing, they don't know and they're lying to you. That narrative right there is the danger.
We hope you'll tune into the latest episode of Market Matters. We have Jessica Inskip joining us. We'll be discussing her journey from trading to market education and the dangers that you need to watch out for in the financial influencer space. You can watch now on Schwab Network on our YouTube page, and you can subscribe wherever you get your podcasts. But Jessica Inskip is actually joining us for the Big Three today as our finfluencer of note, and she can educate you also on her own social pages. And she's joining us from the NICE as well today. But Jessica, thanks for being with us. Of course, Rick Ducat always with us to go through the technicals as well. Jessica, the Director of Investor Research at stockbrokers.com. Jessica, love to get your thoughts on the action that we are seeing today. A bit of a mixed picture, perhaps waiting on some data and some earnings and another event happening at the end of the week.
Definitely a big event that's happening at the end of the week, Marley, and I think that's what the market's really waiting on. We're going to raise cash because there is just insatiable demand for the SpaceX IPO, so I think a lot of retail is setting aside cash if they're not able to access those through the IPO process. A couple of other brokerage firms have even lowered those thresholds, so I think that's a component of it. But also from the bigger picture, we just left one of the best earnings seasons we've had since 2021. There's lots of strength there. Yields are coming off, oil is coming down, and that's all a good backdrop. But there's a little bit of a sell-off now within the tech sector, but I think that's because we're waiting on data for demand with the SpaceX IPO, because we've got a slew of other artificial intelligence IPOs, even Oracle earnings today. That's going to give us more clarity on that artificial intelligence narrative, which is driving the market higher. So I want to understand that before we move forward, and I positioned a lot of my trades and discussions around that as well.
All right, so the first one, you've got three big names today. Take us through Apple. That's your first pick. Of course, we're in the middle of the Worldwide Developers Conference. We got a lot of Siri updates. I know you've been talking about their AI strategy, and we did actually get some updates to this AI strategy, finally.
We did, and it seems like Wall Street's not really liking those updates, but I think Wall Street can be a little bit disconnected with the consumer, at least what they want from an artificial intelligence perspective. So I actually really liked what I saw from WWDC. Apple is certainly taking their time, and there's some setback from what this big AI announcement that we're expecting. But when I'm looking at something like shortcuts, for example, shortcuts was something where you'd have to do a bunch of if then that type of statements in order to set that up on your iPhone. It could be integrated with ChatGPT, but now it's natural language model, and that's something that's going to be a quick adoption from a consumer basis. And then if we look at all of the other updates that they've done through cloud, it's all about their Apple ecosystem. And when I think about the broader AI adoption, we're kind of in the midst of it when we're talking about it constantly with headlines and such. But if we look at the everyday person who's actually utilizing ChatGPT or similar, some are just using it for search now. So we have to take into account broader adoption and what that trend will look like. And I think Apple is taking their time and setting that framework for a reason. Beyond that, what makes me reiterating my bullish thesis on Apple is the lens that they had on data privacy. If we look at trends on social media and this next generation, Gen Z, they really care about data. There is this cyber deck. I don't know if you've come across that very fun side of social media, but there are literally, this next generation is taking old Polly Pockets and things like that and making their own hardware and cyber decks because they don't want big tech to have access to their data. So Apple talking about protecting your data is actually good for that consumer base and that cohort that we want to have that iPhone refresh cycle. So I see it as a positive. The market's selling off, but I think we're missing the big picture here.
I had a similar conversation yesterday with Max Weinbach from Creative Strategies, who's at the event, and said the same thing. What Wall Street wants and what the consumer wants and needs are two different things, and there's a little bit of catch-up to be played here. He also felt similarly to you that most of the advancements were going to be well-liked and adopted relatively quickly. But Rick, as Jessica also pointed out, we are seeing a bit of a pullback in this name today. So as you look at the technicals for Apple here in the setup for this Tim Cook's last Worldwide Developer Conference, what are you seeing in terms of the technical setup?
Yes, a bit of a decline to be sure. What we saw heading into these highs that we established near 317.40 was a rising wedge type shape. So we have our two boundary lines converging toward each other, both pointing upward, typically regarded as a little bit more of a bearish type of setup here. Really, it can go either way. In this case, it did translate to the downside. We did break through some areas of potential support that I had my eye on. First, we had these lows that we saw near 305, another set of areas where we topped out near around 300 or so. The next level that I am focused on would be around 287, old highs here. another old high here, and then we had a support point with our red candle there shortly after we tested that. So that stands out as an area that you could watch out for if we do continue this descent here for potential foothold. So when we do look here at our moving averages, our 63-day EMA in gold comes in at 285, so quite close to that same 287 level, adding a little bit of extra emphasis to that as a potentially supportive level. Meanwhile, we have a confluence here, our 5-day EMA representing 1 week in dark blue, our 21-day in teal representing 1 month. Those come together near about 301, 302 to the upside, so that could be a resistance area to watch out for. RSI taking a hit to be sure. You can see that we have crossed below the 50 midline. Our downward trend line is still in play. One thing to note as well is that we saw a little bit of bearish divergence heading into this decline here. RSI made a lower high while price made a higher close. This kind of mismatch between price and momentum, typically not what you would want to see if you were bullish. Finally, our volume profile study shows that we did have heavy trading activity up here near the 308 to 314 range. Another node here, much smaller though, 295 to 302 has been breached. Things really start to pick up down here, 276 to about 267, with the point of control coming in near 271.
Yeah, right now we are down more than 2.5% for Apple. We're at 293 and some change. But Jessica, your next one here is one of the earnings events that we have left over, sort of in our little gap between seasons. We've got Oracle coming tomorrow. How are you looking at Oracle in advance of these earnings?
So in advance of these earnings, I love to pull option statistics just to understand market mechanics and where options traders are really pricing this. It is skewed very much to the upside if I look to the call to put ratio, and we have an implied move about $27 when I pulled it earlier today. So the way that I normally like to do that is via an iron condor, but since I have a bullish skew to the upside, I'm selling a bull put spread. So what I'm doing is I'm taking and this, when I pulled this one, it was around 215. So that $27 implied move, I'm doing $27 to the downside. That way, if it does move lower, that is where I am choosing to sell my short strike. And I'm going out to July 17th. So around 190 is where I'm selling, and then I'm buying at 180. That's a 10-point difference there. That times 100 to 1,000 is going to be my maximum loss potential. I can bring in a premium of about 300. So if you're executing this trade, the big rule of thumb here is we want a ratio of 3 to 1 if we can. So I want to get at least 30% of my max risk that is there, so the width of that spread, which I could capture here. Now, again, if you want additional premium and you think it's going to stay within that implied move, you could add a call spread, of course, and make this a short iron condor. But I see the bullish upside. So from a trading perspective, this looks great to me because of that high implied volatility, and I could capture that premium that I'm looking at in the ratios that I choose.
All right, Rick, are you highlighting similar levels when you look at potential post-earnings moves for Oracle and the technicals that we're seeing in advance?
The 180 level at which Jessica chose her long strike here is pretty close to where I had my eye on as well. I had 179 here with our green line because it represented a notable low point that we saw during our climb to the upside off of these lows near 134.57. So again, we had kind of a rising wedge type of shape from there. If you were to draw another boundary line going across those highs, big push to the upside though kind of invalidated that, but we came back to earth pretty quickly as well. Our old trend line, though, is still in play. You can see our white upward sloping line is still not being breached yet here, but we do now have a sharper, steeper line pointing downward here. The area at which we've stopped for now, it seems like, is this supportive zone. We had our gap to the downside, we had some highs there, and then another set of highs. So between
more selling going
to
on.
208 roughly was the supportive zone that I had for consideration.
This is going to get interesting.
Going forward. 250 was around where we had some highs as well.
Okay.
A very quick surge to the upside. Our moving average picture in this case shows that for now we're between our 5-day EMA to the upside, our 21-day EMA to the downside, giving us some boundaries of about 216 to 207 roughly. Our 21 EMA
boy, look at that.
Lines up very closely with our trend line as well, so something else to consider. We also can see
this
our
looks
yearly
very
and
yummy.
quarterly EMAs quite close to each other as well, near about 187 to 190. So the longer term moving averages are more significant when you're thinking about potential supportive areas. RSI has been breached. We have our downward trend line in play now in red, but we remain above the 50 midline here at this point. So look for that for a potential bearish crossover or for that area to hold on and for the upward momentum to resume. We can see now our volume profile shows a smaller node here near about a 285 to 313. We have also crossed below this one, which was about a 214 to 226.
Yeah, new lows.
Excuse me, our first one was
do it.
233 to 243. Then we have our other node here with our point of control near about 197. So that's the heavy trading area to look for potential support if you were looking at it by this metric.
All right, and Oracle also under pressure today. We're trading down more than 2.5% at 206.26. We'll, of course, have those earnings for you after the close tomorrow on Market on Close. We'll cover those live. But this last name, Jessica, arguably one of the most talked about names, the largest company. We're talking about NVIDIA here. A rough week of trading for them in the last 5 trading days and also down over the last month. Take us through your thesis on NVIDIA.
You're the idiots, not us.
Talk name for a reason. I actually tried. I had an investment thesis coming
NVIDIA.
today looking at exposure to data centers in space, specifically with the SpaceX IPO, and then something that the CFO stated within an SEC filing in a later interview about the big bottleneck being silicones and then similar.
I love you.
I tried my very best to not bring that back to NVIDIA, but that's where it landed. So that's essentially why I believe it is talked about so much, because they're broadening their ecosystem.
I love you.
The TAM is just astronomical, and so it is the most talked about stock because it should be. Because of the exposure that it has and each iteration that they have, they're creating this large AI ecosystem. Now, if we're talking about expanding Singapore and over in our friends over in APAC, there's more opportunity there. They expect their AI system revenue opportunity per gigawatt to grow from 40 billion, which was from Blackwell Ultra, to about 60 to 80 billion from
I didn't know that, darling.
100 billion from their famous. So, of course, that's speculation that we're hearing, but that is also opportunity. And
speculation.
It's still undervalued from a valuation perspective. But what's interesting from their latest move to consumer and consumer PCs. Now we see Apple with consumers, but now we also have data center in space.
May I come trade with you, please?
Large language models. You can track NVIDIA having their hands in picks and shovels with every aspect of that, creating this large ecosystem and essentially a larger moat. So I still think that bull thesis stands. It is a bigger stock that is a large piece of the portfolio. So when we're considering freeing up cash, that tends to be the first one to go, meaning watch this, watch for pullbacks. Make sure you have your exposure to that, but you may already have exposure to that through index funds and of the like. But I do think it is still a very bullish thesis. It still has a long way to go because the AI narrative is still very much intact and we're still in those early innings.
All right, Rick, we are seeing pressure on NVIDIA today as well, though down about 2.5%. So what are you seeing here?
Sharp climb off of these lows that culminated at 236.54. Trend line has been broken. Downward channel in play now. We have also breached some old highs that we had here.
Bull flag technique.
Another set of highs that we saw established several times.
Riding the camel's back.
Lows stands out near 196. Our moving average picture shows that we are right around our quarterly 63-day EMA, which lines up with our downward sloping channel type shape here. RSI trending lower. We are below the 50 midline as well, so a bit more of a bearish shift. Finally, our volume profile study shows that we had a significant node here as well as here between these two areas. The lower one comes in 195.203. The next one comes into 207.
If you were using that terminology around me, please.
Potential congestion when we just zoom in on the past 3 months.
Is that like confirmation?
All right, Rick, really appreciate you for that closer look at NVIDIA there. And Jessica, always appreciate you joining us for the Big Three and also for being on Market Matters this week. You can check that out wherever you get your podcast. Jessica Inskip joining us live from the NIC, and of course Rick Ducat, our lead market technician. Coming up next, we're going to spotlight the Jessica moves in the state of the global supply chain, how the Iran war continues to impact the global economy. We'll have that next for you, but I do want to pop up the indices here because we have moved down.
When there's a node, I'd like to know about it.
Minutes or so. We're down up more than 1% on the S&P, down close to 2 on the NASDAQ. The Dow pulling down 0.6%, and the Russell 2K about the same. We'll have all of that for you.
I'm not too worried about it. We've had a real good run. I mean, it's really nothing.
I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area.
He really started with nothing. He worked hard and...
Dad, I got a question for you. When did Uncle Jimmy start trading stocks? Well, it was back when Martha Stewart and he had got a job over in Hawaii, and he just had an operation on his foot, so he didn't know. He thought he was going to be homeless. So it was right after Christmas. He didn't have sold his very last record, so he'd have something to eat. He had a record collection, but he kept looking, and he found that job. But he had to travel 5,000 miles to get it. How was he going to get there? That's the question. He couldn't fly, although he did, in a way. His truck couldn't swim, but it did float, in a way. They said when I packed up my truck, they said, make sure that you got everything tied down so nothing will get stolen. So I tied my speakers down, and all but my little bitty head skull that I had in the lighter that would light up. I didn't tie that down. It was gone. Someone stole it. May I have a moment of silence, please, for my skull? Okay. AMD down $24. And Tesla's back under 400. We gotta get serious on these. This one here looks very serious. Whatever your favorite stock is, that's the one I'd be looking at right now. You already know what mine is. It's a Magnificent 7. Well, who's this? How dare you? God, look at the SPY. Look at that. Okay, there we go. So we got to break the 9. And that's a pretty good run up to the 21. I think that could be done. If we break the 9. Or we come back and we do a double bottom, hit this right shoulder, and then come out and try to break the double top. And try to do that. Okay, here we go. Run, dude. Snake. Break out. Pull back. Boom. Oh, where are you? Crowd's going wild here. Looking at all these. Jim's going to take a big risk. So I can do this. I've been waiting for this trip. $73.85s or the 90s. Actually, I want to go higher. 73.80s. Okay, he's got it picked out. Okay, we're getting ready to squeeze. $73.80s right now at $5.20. drink. We have a situation here. Goes $4.70. These are the 73.80s. I think you'd really be a show off if you got them right here. And we did the double bottom out of the snake. $4.50. $4.60. Come on, you can do it. Tried that there. Run, dude. I'm debating. $73.80s at $5.20. Let's mark this. There it is. It's locked in. We're above the 9 now. It's not good. 500. There it is. 73 at $5.20. You did it. Okay. 73.80s. I gave you plenty of time. Sure did. This is called the SPX. Calls scalping. And when I say lotto, that means same day. So I don't have to put the date. And only do that with the SPX and nothing else. Unless it's before the noon, then I'll do the SPY. Okay. We have a problem here. Come on now. Ooh. Oops, strike was 73.80. I'm gonna break it. I don't trust it. Boom. Come on, give it to me. Oh, that's funny. Doo-doo-doo. Okay. Mm-hmm. Oh boy. Big knife today. Interesting. SPY index PX new lows. Since I can't make up my mind. We don't know when. Until it breaks out, something I'm thinking. And it'll take jabs. Well, moving up closer to the money, we'll jump in. A lot. That knife's complete sell-off. Getting old. Damn. No. Oh, I missed it. Shit. That's no good. It's like we finally broke out of it. Well. The murmur. 7350s. Oh. Oh boy. Doo-doo. Oh, yeah. Very nice. And we are now approaching the 200 SMA. Boom. Congratulations. thought. Exactly what I thought. Beautiful.
that the way to look at this is that AI is not replacing software itself. What AI is doing is that it's changing the workflows that people that people do in ways that is disruptive, right? So you end up with a scenario where the expectation is that AI is going to change the tasks that you are doing. So you may not need as many software tools to do it with a human.
Colin, I want to get your take. Same question to you, friend or foe?
I think it's a bit of both, really. I do think that there are some disruptible businesses in there. So, for instance, we had Wix, the website developer. That's a pretty replaceable skill, and that's kind of what they've been saying. That's why they've gone down so much. On the flip side, you have some like your Salesforce, kind of companies or Snowflake. That's very hard for AI to replace. So I think it's a bit of both. I think that for the right company, AI it's what they're there for. It makes a good tool even better. But some of the businesses can be disrupted.
Fernando, I want to go back to you then. You said both, but you said it's changing workflows. So what companies are most vulnerable when you think about changing workflows?
I think that the companies that are most vulnerable are the ones where they don't necessarily understand and are deeply involved in the customer's final output, right? So what you end up with is how much as a company do you understand and how much do you matter for what your customer is doing?
Yeah.
Take a generic AI. If you're a generic company and you're a generic software and you don't understand the background of what your end customer is doing, you can be replaced. So I think that getting close to what that business process looks like is going to be very, very important.
Very close.
I want to go back to you, Colin. You believe that IGV will be a long-term performer. Tell us more about that view.
Yeah,
the 7350s are now $26.
We've seen semiconductors be the thing, and that's
27.
the picks and shovel play. We saw that back in the tech and media telecom boom, where you invested in picks and shovels, Cisco, and all that kind of stuff. So semiconductors are this version. Then you start to poke around and say, well, what's next?
Yeah, what is next?
You look at some of these software names, and they
have
benefited from AI, and I think they will continue to benefit from AI. The problem is the traditional software investor sits there and is used to software being a capital-light business. And you look at something like Oracle, a lot of these guys are investing in AI. And they've been investing in AI for a long time. It's only become a perceived problem lately. So to me, they are a long-term AI winner.
Okay. Fernando, I want to go back to you. If you could own two software names or ETF, what do you like? What stands out to you?
What stands out to me from a trend perspective, from a market perspective, is I think you want to be able to own, as mentioned, like somebody who owns the infrastructure. I love the picks and shovel analogy, right? For now, right? Because that is where there's significant interest. But I think that moving longer term, more than picking a specific stock or ETF, I'd like to dive into a little bit more of, okay, how attached are you to the actual business of your end customers? How connected are you to how your end customers are making money, right? So I think that the immediate play on infrastructure is really interesting, and over the longer term, it's more how well are you connected to customer value.
And Colin, yield the floor back to you for a final thought from you. You talked about IGV, but let's talk about an individual name that's on your radar, Oracle. Why is that on your radar?
Yeah, and they have earnings tomorrow night, and it is an interesting middle ground because they have a lot of investment in AI. So they are a potential AI winner. People are scared to death of their capital spending plans. My attitude is, and again, it's just not the traditional software model. Traditionally, that's what you do. You invest money in something that's going to end up making money. That's what they're doing. So to me, Oracle is one of the best options out there right now. And, I mean, obviously you buy something right in the earnings, it can be a little scary, but I think Oracle is a great choice. And then, talking to what Fernando was talking about, if you have high attachment rates, a Salesforce management system has high attachment rates. It's pretty hard to separate from a CRM business. So something like HubSpot, to me, is a choice for on the other end of the AI trade. So that's a traditional software name that I think that can do well in this world.
All right, we'll have to leave it there for time. Thank you, Colin and Fernando. That's Colin Simons, CIO of Lloyd Financial Group, and Fernando Montenegro. He's the Vice President and Practice Lead of Futurum. Coming up, we'll dive deeper into the sectors on the move this Tuesday afternoon. Look at some ETFs that use earnings data to build portfolio positions. The Watch List will return after this break.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Welcome back to the Watch List. I'm Dan King Hall, coming to you live from the New York Stock Exchange. Time now to take a look at sectors that are moving markets into the close. Joining us now for that is Kevin Hinks, who's over at the SIBO. Kevin, this market will keep your head spinning today. We started higher. Then when you and I talked earlier on Fast Market, we were sitting essentially at the lows of the session. We've made quite the recovery since then. We've still got some sectors that are under pressure. Walk us through what you're paying attention to on the sector front.
Hello, Diane, and remember what I said a few hours ago, the day was not over yet. And now, the comeback in these markets is pretty spectacular. Now we have 9 of 11 S&P sectors higher. Energy and, of course, information technology, that's weighing down the overall S&P, but the equal weight S&P is now up 0.5%, Diane. So take out the names that we know. The NVIDIA, Broadcom, Micron, AMD, Intel, Apple, Microsoft, information technology. Almost everything else is on the upside in terms of sectors. So, yeah, we had a market that was down over 2%, now down less than 0.5%. And like I said, the equal weight is now higher. 9 of 11 sectors now on the upside, Diane.
They used to call this day, you know, I know it's not an old term, but it became a term, Turnaround Tuesday. And at first, earlier in the day, I didn't think that was happening. I was going to give it a new name and call it Takedown Tuesday. But it seems like we're returning to that turnaround. Again, we still have some pressure in information technology, but we're well off the lows. Final thought from you, Kevin.
Here's the thing, Diane. The macro is still setting up pretty positively. You got crude oil lower, the dollar lower, 10-year yields lower, and the VIX is barely up now with the S&P down 0.5%. So the macro setup is keeping a bullish posture. And like I said, now 9 of 11 sectors have turned green. Pretty spectacular comeback here today.
Absolutely. Thank you, Kevin. That's Kevin Hings, my co-host of Fast Market over there at the CBOE. Time now for our ETF watch list segment. Joining me now for that is Sal Esposito. He's the head of ETF products at Zacks Investment Management. It's good to see you this afternoon. Before we get into a couple of the names on your list, I know we'll be looking at Zinc. This is an equity income ETF. But before we get into that, you know, a part of what sets this up is based on earnings season. Earnings season is largely behind us. If you had to give investors one big takeaway, what's your takeaway from this earnings season as we really wind it down?
Yeah, I mean, I think look at the resiliency of the companies, right? I think there are obviously good companies right now that have been resilient through this higher inflationary market that we're continuing to see. I think know what you own. I think that's kind of what we like to say, right, at Zacks. I mean, we've kind of focused on earnings for the better part of 50 years, and it's really looking at the balance sheets and understanding the companies and the resiliency of some of them that are in the market right now.
All right, Sal, let's talk about the first ETF that you're bringing us today, Zinc, Z-I-N-C. It's the Zacks Income ETF. What are investors getting exposure to through that?
Yeah, so really what we're doing is we're using and leveraging our research back process, right, to kind of come up with an ETF that focuses on companies that have high paying dividends over the course of 5 or plus more years, right? So they're not only paying a higher dividend, they're consistently paying a higher dividend, but they're also quality names in the portfolio that have real earnings behind them.
Okay, and then the next ETF on your list, this is PRIZ. It's a preferred income ETF. It feels like this one is less risk. When I say less risk, it feels like the framework is, but am I thinking of this right? What are we getting exposure to here?
Yeah, so exactly.
That's a
right,
good
right?
question.
Probably everyone's favorite topic, right? Preferred stocks are certainly, I believe, are literally kind of maybe underrepresented. Or talked about. They're the hidden part of the market. Really, what we're trying to invest in is companies.
That wasn't funny.
Preferred stock in companies that are also quality businesses with quality balance sheets.
Fire this guy.
The yields on preferreds are a little bit higher than the traditional money market you're getting right now. So I think, in a rising rate environment, you see kind of lowering prices for preferreds, but certainly if you're willing to kind of step in and take a little bit of risk in the market, you can get a consistent 6 to 7% in any preferred you invest in. So what we're doing is we're putting an active portfolio together with a group of preferreds of companies that have solid fundamental balance sheets and also have consistent yields that range between 6 and 7%.
So it feels like that one is about balancing risk there. What's the investor profile for each of these? Let's go back to Zinc. What's the investor profile that you think of when you all were creating this ETF?
Yeah, it's really both of them are focused on income for clients, right? I think we have, right, we like to talk about the rising covered call market. I think we have 215 billion in assets in covered call ETFs in the market today. This is a little bit different. We're kind of approaching it differently. We're targeting an 8% yield, but you're going to be able to participate in the upside. The yield on the portfolios are for Zinc is about 4.25% right now, and on the preferred strategy, it's about 6.5%. And we're going to try to make up that to get to that targeted 8% by returning some capital.
All right, Sal, we'll leave our conversation there for today. That's Sal Esposito. He's the head of ETF products over at Zacks Investment Management. Coming up, we'll take a closer look at some of the large options trades to watch in today's market. Rick Ducat will join us with a closer look at big moves for Microsoft, the Williams companies, and Synopsys. The watch list, we'll be right back.
It's the trading day. That's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close. Here on the floor, I bring you real-time sentiment from traders driving action. And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring,
Well, that spy's
count
out
on
looking for you,
Schwab
bird.
for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
Yep.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Andrew? Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I programmed that 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Hey, investors, you know the market moves.
None of it's
Schwab
true.
is here to help you move with it. So, whether you're buying,
Pack of
selling,
lies.
holding, or planning, whether you're ETFing or 401k'ing,
I've never met his dad.
or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest
I've never
your
met him.
way. Sounds nice, right?
Welcome back to the Watch.
Well, that's pretty good.
Where we highlight outsized options trades taking place in the market. Joining us now is Rick Ducat, our lead market technician. All right, Rick, you found one in Microsoft. It is under pressure today. It's down more than 15% year to date. Had been in bear market territory, but what stood out in the options market today?
Diane, I like to find themes for this segment here where we kind of have some things in common here. So this one I like to call put your money where your mouth is. So these are all unusually large put trades. These are all opening trades. These are all, kind of unusually large either in dollar amount or in the quantity of options or the volume that they make up of the total day's trading here. So as we said, the first one here, Microsoft, plus 8,000, July 17th, 420 strike puts and a 2030 debit here. So not really any specific news that really caught my eye about Microsoft today. A company probably many of us are already pretty darn familiar with in general here. So just a very large bearish play here. 38 days to expiration here, a $16.24 million debit paid, which would be the max loss in this case here. Max profit would be $319 million if it were to go to zero. So the thing about this one too is that because these are rather deep in the money puts that they are buying, this one has a break even quite close to our current price activity, 399.70 or so, only less than 1% to the downside. Expected move during this time horizon, plus or minus about 8.6%. So this one, kind of poised for a downside break perhaps here. The day's volume here, this name, the 8,000 lot trade, compared to the total volume of more than 600,000, not really very significant, about 1.3% of the total day's trading here. The sizzle at the time I checked, meaning today's options volume, relative to the 5-day moving average of options volume, came in at 1.4. So a higher day than average for Microsoft.
Put your eye on this. Next up on your list, the Williams Company. It is up about 19% so far in 2026. That's on a year-over-year basis. What trade stood out today?
So an energy infrastructure company, perhaps not a household name here, mostly focusing on the natural gas industry and the associated pipelines here. Again, kind of all three of these names here, not really any, headline news that really caught my eye necessarily. But this trade was pretty darn big in terms of the typical day's trading. So minus 17,000, July 17th, 65 strike puts at a 55-cent credit here. So in this case, a very large quantity of perhaps a little bit less expensive puts being sold here. Neutral to bullish outlook is what happens when you're selling these puts. So about 38 days to expiration in this case as well. The credit received here, $935,000, is the max profit. Max loss would be $109 million, potentially if we were to go to zero once more. So we can see that in this case here, the expected move is about 7.6% plus or minus here. The break even, 64.45, is right around 10% to the downside. So this one would need a pretty substantially bigger than expected move to start to fail in this case here. The trade pretty much looking for price to stay above a set of old highs from early December that were established in this name here. So in this case too, what really stood out to me was the size of this trade in terms of the options quantity relative to the day's total volume. 17,000 was this single trade. The total day's volume was only 19,550. So this trade alone was about 87% of the day's volume. The sizzle today, 6.3, so substantially higher, more than 6 times what we saw in the typical 5-day period that for the options volume that we established recently.
All right, and the last one on your list, Synopsys. It is down about 6% year over year. So what's the synopsis with Synopsys?
Very good, yes. Intellectual property design for the semiconductor industry, virtual prototyping, emulation, manufacturing solutions, etc. here. So again, kind of more of a niche company in an important field here. So this is a similar trade to our last one in terms of both kind of the scale and the outlook here. So this would be more of a higher probability take at expecting that the stock has not going to get below the break even here. So minus 2,405, July 24th, 390 puts at a 362 credit in this case here. So neutral to bullish once again, 45 days out. Max profit here about $870,000. So these two trades perhaps may seem a little bit smaller compared to our monster Microsoft trade here, but still pretty substantial amount of money to put down for a trade. Max lost $92.9 million in the scenario that this stock would go all the way to zero here. So again here, the break even 386.38 is about 16% to the downside here. The expected move plus or minus about 14.2%. So a similar type of risk setup here, looking for the price to just stay above that break even, kind of a softer target when you're selling puts or selling calls here. In this case too, the volume 2,400 versus 4,900 total volume, 48.5%. The sizzle was 1.2.
All right, good stuff. Thank you, Rick. Appreciate that. Those are some big outsized options moves. those we found in today's session, where we have been watching quite the recovery. We got mixed markets as we head closer to the finish line on Wall Street. Brian Belsky puts it this way: this is the
Not a
bull
bad
market
comeback.
that bends but does not break. We'll see as we
73.50s are at 31.80.
Thank you so much for joining us today on the watch list. I'm Diane King Hall. Download the Schwab Network app. It is available in the App Store. Tune in 24/7 on SchwabNetwork.com.
No.
You've got Market All Close with Marley Caden and Sam Vadas up next.
I don't think they
For checking,
understand.
the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, we would be.
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
And I'm Sam Vadas, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll break down a wide range of stock picks for your portfolio spanning multiple sectors. Then we'll discuss the AI ROI reckoning and the challenges companies face in showing how they are creating value with AI. And we'll preview earnings for Oracle ahead of the software giant's quarterly report out tomorrow afternoon. But Marley, for now, just walk us through what you've been watching today.
The first thing is OpenAI confidentially filing for a public listing. The Sam Altman-led firm is working with Goldman Sachs and Morgan Stanley on that potential listing, which could come as early as the fall, according to reports. The company did say that it has not decided on timing yet. Also watching JM Smucker today having its best day since 2008 following its earnings report. The packaged food maker reported better than expected quarterly earnings alongside 6% growth in net sales. Now, despite those strong results, the company says it does expect sales sales to fall in the coming year due to declining coffee prices, but that didn't affect stock action today. And Broadcom, last on my list, partnering with Apollo and Blackstone to launch a new AI infrastructure platform. It's called AI XPV, and it's backed by an initial $35 billion investment that aims to finance the massive computing capacity needed by leading companies. The initiative expects to enable more than 20 gigawatts of compute capacity through 2028, employing Broadcom's chips and networking solutions to support companies like Anthropic and OpenAI. We will take a closer look at the race to build out the backbone of artificial intelligence coming up. But first, let's check in with the markets. Still have a mixed picture here, but earlier in the session, we did see things fall entirely into the red. So we're looking more like we did to start the trading day today. The S&P trading down about 0.4 lower. We're at 73.76 right now. On the NASDAQ, we are 1.4% down, 28,996. The Dow is up just slightly, added about 76 points so far today, 50,862. And the Russell 2K is up 1/3% at 2865.31. Taking a look at the 10-year, we are ticking slightly lower. We're at 454 right now. The dollar's at 99.90. Gold 42.91.60 a troy ounce. That is falling. Crude oil at 88.02 a barrel, the lowest we've seen in weeks. And Bitcoin at 61,830. It just can't manage to get itself back up out of that range it's found itself back into. Do you want to check in with Sam, though, and see what is sticking out to her on the trading session so far today? Sam?
Well, obviously technology selling off today, Marley, which goes to show that that positioning unwind we saw on Friday wasn't done. And yesterday was just short-lived relief. President Trump saying just before midday that the U.S. must respond to the Iranians shooting down a U.S. Army helicopter while patrolling over the Strait of Hormuz. Now, oil didn't budge a whole lot after that announcement. It stayed below $90 a barrel, although it is off the lows right now. But that's still not helping stocks, it seems, across technology. There's a lot of talk on Wall Street about supply in the market right now ahead of SpaceX's IPO on Friday. The question that traders are asking right now is, where does the capital come from if it doesn't come out of some of these trades? Now, what stands out to me about today, though, is exactly what you were highlighting. There have been more stocks up than down here at the New York Stock Exchange today. We're seeing this rotation into other parts of the market, like your consumer staples, your travel, leisure stocks are getting some relief from those lower oil prices. And real estate is also rallying after home sales came in better than expected to the highest level since December. So we'll continue to track this volatility in the market as we approach the close today. Marley, I'll send things back over to you and Jenny in Chicago with some of today's top movers.
Thanks so much, Sam. Like you said, Jenny Horn, co-host of Next Gen Investing, joining us here to take a look at some of those top moving names. And this first one isn't moving in a publicly traded sense, but it is one step closer to being publicly traded. Talking about OpenAI filing its S1.
Finally getting some details, yes. And I'm not sure if this is read as a good thing or bad thing because of the lack of time frame really given, but at least getting some further details. They did confidently file paperwork with the SEC to prepare for this potential IPO, allowing it to begin the process without having to publicly disclose its financials quite yet. So the filing does not include a timeline, meaning OpenAI can wait for market conditions to improve before moving forward, or per more of their commentary, really raise more capital as a private company. But a confidential filing does let the company revise its prospectus and valuation privately before, again, formally launching a deal. It does signal that OpenAI is preparing for this public debut, even if an IPO could still be many months away. They do still remain heavily linked to Microsoft, which is their largest strategic partner and investor, a relationship that would be central to any IPO discussion, frankly. But the company has seen this rapid growth tied to, of course, its really most important product being ChatGPT subscriptions, as well as developer usage tied to broader AI demand. But the filing does come as part of the broader expectations build behind the IPO window for high-profile private companies that we're seeing reopen now in 2026. So there's definitely a lot of enthusiasm. And per its last valuation as a private company, of course, the company was valued at just shy of $1 trillion. So when we do finally get some more details in that prospectus eventually, I'm sure that we'll see some eye-watering valuations.
I mean, and that single funding round valuation, that $852 billion that you just highlighted, is more than the other two named IPOs that we have in terms of their single rounds of funding. So it will be very interesting when they decide to go public, and if they do another round before that, what that valuation will look like. But right now, the pipeline of these three big AI or AI-related names stands at about $3.6 trillion.
Which then, there is good reason why there's so much visibility around it, right? Because I mean, like, that could have the potential to swing and change and obviously evolve the overall market.
It absolutely could. Well, we see the timing about when they decide to go, if they want to wait to see how the other two or try to get out of the gate a little faster. So it will be fun for us to watch and cover. But let's move on to an earnings story here, because we do have a couple names that are a little late in this last 3% of names reporting in the S&P. J.M. Smucker is one of them, having its best day in decades following its results.
Best day since 2008, at least as last of like 5 minutes ago, leading the S&P 500. We have pulled back ever so modestly here, but I mean, still has remained to be a big winner despite the overall market not fully contributing throughout today's session. But we did see better than expected earnings, except sales are still expected to now fall in the coming year. So bit of a mixed picture. Earnings again topped expectations. Net sales rose 6% on an organic basis. That figure did beat street expectations, but the reaction may have been even better if not for some mixed guidance now into fiscal 2027. They expect net sales to decline 3 to 4% year over year. Analysts had been anticipating sales would actually rise ever so modestly. And so I did read what the street thought of this. BNP Paribas gave an interesting note saying that they were really braced for them to deliver this top line miss given the recent scanner data at their firm, but still was able to somehow defy those expectations. So they were not surprised the market overlooked this weaker than expected guidance, saying the anticipated sales decline, it appears to be largely from these falling prices in U.S. coffee. So they have little control over coffee prices. Investors do tend to somewhat disregard some of these short-term fluctuations, but again, when it becomes a long-term trend, that's when it's really more of a concern. But the earnings have really showed this solid start to James Smucker since striking a deal with activist investor Elliott Investment Management back in February. So as part of that deal, they did appoint 2 new board members and signed an information sharing agreement to facilitate their broader collaboration with the firm. And so it does seem like that is at least working in their favor right now. But mind you, also PepsiCo is another firm that had a pretty major deal with Elliott, and things seemingly have slowly but surely started to turn around. But it's a difficult environment for anything that right now has grocery or food exposure, with of course some expected supply chain disruptions that we're only really at the tip of the iceberg of.
Yeah, and inflation pass-through potentials on the cost of those goods as well. But I want to move to housing here, because we got some good housing data this morning showing that our spring housing market may be looking closer to what realtors were hoping for the spring season. But then we got a mixed commentary from KBW, Toll Brothers and Lennar, one upgraded, one downgraded, although with that home data, both names up today.
Both names are up today. So initially I was like, really bullish report from KBW on both of these names. It's not quite that. We see some divergence. So we'll start with what they like, and that's the fact that there's this K-shaped economy within just the housing market where higher income buyers remain strong while entry-level demand is still under that pressure. So for that reason, they did give some favorability behind Toll Brothers, citing this resilient demand from affluent buyers who are less sensitive to mortgage rates. Luxury buyers have this higher credit quality as well and larger down payments, more cash at hand supporting this demand. But the company is expected, in their opinion, to benefit from stronger pricing power and stable margins around the mid-20% range. They also did point to better fundamentals and relative valuation, with Toll trading below its peers, despite, in their opinion, the stronger positioning. So the average selling price for Toll Brothers is between roughly $900,000 to $1 million. Then we look at Lennar, which is roughly $375,000, so quite a different price range there. So they're more cautious. They downgraded Lennar largely due to its heavy exposure to these entry-level buyers, saying that segment is facing pressure as we see high mortgage rates, affordability issues, and just weaker right now margins for Lennar, as well as its land strategy, adding roughly 50 basis points of that pressure. So it's no secret that affordability has remained a challenge. We're seeing more and more of these homeowners stay in their homes for longer to avoid having to pay a premium on rates and just avoid right now some of the just added cost of moving. But definitely doesn't help to have this feeling of uncertainty with gas prices. This just only further does illustrate that K-shaped economy within just housing specifically.
Yeah, and that data this morning, though, giving us some indication at least that people are adjusting to these higher mortgage rates that we're dealing with, up closer to 7% right now, as we had home sales looking much better than expected. Now, this this last story, I mean, we've been talking so much about the AI infrastructure play and how important AI infrastructure is going to be. And clearly Broadcom must be listening, because they've got now this new partnership with Broadcom, Blackstone, and Apollo Global Management coming together to create this platform. So break this down for us, and what's the intention behind it?
Yeah, and I mean, just a shy $35 billion is financing this AI infrastructure deal. So the platform, which is called AIXPV platform, will enable more than 20 gigawatts of this compute capacity through 2028, which then will employ Broadcom's chips and networking solutions to support companies like, say, Anthropic, OpenAI. But Broadcom did say earlier today the platform's initial $35 billion tranche will facilitate Anthropic's previously announced capacity expansion of more than 1 gigawatt of compute infrastructure. Now, as we look ahead here, the platform will establish a framework for future deployments of these XPU-based compute capacities and networking infrastructure that is overall just aimed at really lowering the cost and the power requirement, which is very critical to the AI model and training inference. And so their CEO did say the platform combines their technology roadmap with a long-term capital to really support this, of course, growing demand for AI. But Apollo noted its participation as a primary capital partner along with Blackstone reflects the growing role that private capital is actually playing an interesting role in financing these digital infrastructure builds, which is wild because the credit markets have been all over the place with how we're perceiving, I mean, some of these massive deals. Oracle is one that's been caught up in the fray of like what their ongoing debt levels look like. But it is interesting to see more of this private funding interest and private capital at that. But overall, Broadcom pulling back today with the overall market. Pulled back, of course, last Friday, but this name still has been a really strong player in broader AI throughout this year.
It is really interesting to see and hear the commentary also from Apollo about the participation of a primary capital partner in the private space, because we keep demanding so much ROI on these AI investments, and we're seemingly seeing an uneven reaction to the capital spend from a lot of these names when they're getting involved in these infrastructure build-outs. So we'll be curious to see if more partnerships follow in this same vein, where we see some of these mega companies with very large capex then tie to private capital to try to offset perhaps some of those costs.
Okay, I think that's such a good point, because like, where is really the ROI for any of this, really? And I think that's probably, I mean, right now the overall concern, not to say that there's not, real monetizable power here in AI, but we talk a lot about these deals without then talking about the returns, which I think is the next shoe to drop, and like proving yourself and where you stand in the broader AI hype, which is still very much real. I know taking a bit of a breather today, but all of these names have become just relatively expensive given their run-ups this year.
Absolutely. Thanks, Jenny, for breaking all of that down for us. Jenny Horn, co-host of Next Gen Investing. And Sam and I will be taking a closer look at AI ROI and where some of those returns are coming from shortly in the show. But Sam, what do we have coming up next?
In the meantime, we're going to discuss, Molly, a wide variety of stocks to keep on your radar across multiple sectors. That's coming up next on Market on Close.
You know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets, with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing.
He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to Market on Close. I'm Sam Vardas on the floor of the New York Stock Exchange alongside Marley Caden over in our Chicago headquarters. Let's check in with these markets because we've come off the lows now. It got pretty ugly around midday, but the S&P 500 has managed to pare the losses. We're down 0.6% right now. A lot of that weakness, as I mentioned, is coming from technology. We saw that unwind the back end of last week. It looks like that's very much back in action today. You've got the SOX down 4%. You've got the MAG 7 looking like the LAG 7 right now. You've got the NASDAQ 100 pulling back to the tune of almost 2%. So that's where, obviously, the drag is coming from. The Dow Jones has been sort of teetering around marginal gains and losses just in the last couple of hours or so. Right now, it's just on the line. It cannot make up its mind. But the Russell 2000, this is encouraging, is up 0.2%. So that has been our outperformer throughout the course of the day, as we have very much seen that value out of technology into value parts of the market, into obviously some of the discretionary leisure and travel type of areas, particularly consumer-facing names with those lower oil prices, but also, of course, real estate as well. Here are the futures products. The US dollar is holding pretty steady here. We're at 99. Crude oil's the big story, obviously. It didn't budge above 90, even though we got these headlines coming out of the Trump administration regarding Iran and this helicopter. Bitcoin is losing steam once again, along with tech, and the 10-year just continues to hover around 454 right now. So, obviously, this remains sticky as far as higher yields are concerned. It does look like there is a bit of rotation, as I mentioned, in this market, particularly ahead of what we're likely to get from the CPI print tomorrow morning. Ben Emmons writing just in the last few hours, until the SpaceX IPO is out of the way, the trading pattern is likely to remain volatile and defensively rotational, making entry points for a more significant drawdown in tech stocks less compelling for now. So I'll just leave you with that line. Joining me now here at the desk of the New York Stock Exchange to discuss several stocks to keep on your radar is Todd Chanko, stock pick writer for Barron's Investor Circle. It's always nice to see you, Todd.
It is always great to be here, Sam.
I love picking your brains about your stock picks, why you're looking at certain companies. But before we do that, because I know you've got some really nice ideas for us today, I just wanted to take it up to 30,000 feet. I mean, you've been doing this for a very long time. In a market like this, where we see this degree of volatility, I mean, it was like what some traders have been saying, taking, you know, the escalator up and then, you know, parachute with no parachute all the way down.
It's always like that.
Does that make stock picking easier, harder, more exciting? What do you do in this environment?
Well, first of all, a couple of things. What I think is really interesting, so the last time I was here was April 20th, and the VIX was trading at just a little bit over 18. When I just last looked before I came upstairs today, the VIX was trading only around 19, 19 and a half. I think it hit over 20 about 2 hours ago. So the fact is I think there's a disconnect between the market volatility that we might see from time to time in response to every headline and what actual traders think about market volatility. That's one thing. Secondly, as a stock picker, I think it's great when the market is volatile because that's when the really interesting stuff comes across my screens. If the market just continually goes up, I think it's actually very hard to identify what's going up because it's the flavor of the month,
right,
and what's going up because there's actually a really interesting story behind that stock.
It's really fascinating that you say that because it felt for a very long time in recent weeks before we saw last week's pullback that it was like the AI trade and everything else was an afterthought. Has that made it somewhat more challenging to pick stocks in that kind of environment?
Well, what's interesting for me is that, as I said a couple of times when I've been here, is that I am traditionally a bottoms-up guy. I look at my stock screens every week. I look for free cash flow. I look for dividend yield. I look at, you know, has a company grown its EPS by 10%, 20%, 30% over the past 2, 3, 5 years? Once I hit sort of certain, you know, targets that I think are interesting. Then I begin to look at the company story. Now, what I do whenever I contact company management, I always do ask about AI because I never know what I'm going to uncover. But AI itself for me is not either a driver in how I select stocks, and it certainly doesn't determine whether or not I'm going to go with a certain company.
Okay. Let's start chipping away at some of your ideas because I really like some of these companies that you've picked out for us today, particularly because of how thematic they are right now. And I want to start with space because that's all the rage right now, obviously, with what we've seen in that space, no pun intended. Neil Armstrong, we don't often think about him, but used a Motorola on the moon. Talk to us about that company.
So I've been thinking about Motorola for a long time. Now, before we get into Neil Armstrong, what I think is great about Motorola, because it was founded in 1928, and in 1930 they invented the car radio. Now, we take it for granted, but that was a pretty big deal in 1930. During the Second World War, they invented the walkie-talkie. But then when I was doing my research, it turns out that Neil Armstrong uttered those immortal words, right? One small step for a man, one giant leap for mankind, over not just a Motorola radio, but Motorola actually designed the whole communication system for NASA in 1969. So that already, for me, that's actually the height of cool for me. But what they do right now, Motorola, by the way, it's got a market cap of about $68 billion, does about $13 billion a year in sales. What Motorola does right now is it primarily serves municipalities, governments, private enterprise with sophisticated two-way radio systems, yes, but also anti-drone and drone enhancing capabilities. So they've actually covered the whole market when it comes to deploying a whole range of communication technologies. Their customers include the NYPD, the City of Dallas, Germany, Netherlands, Brazil, the Department of Homeland Security, the Department of Defense. So they have a remarkably wide portfolio, and demand is so strong that their management just increased their guidance by about 10% across the board for both earnings per share and revenues.
It's fascinating how these companies, which we traditionally thought of as phone companies, you know, we've been talking about Nokia so much lately, which has kind of transformed itself into an AI company, have transitioned into these other, you know, sort of parts of the market, and they have quite a compelling story to tell. The other one that I was interested in, particularly in light of some of the macro data we've been looking at, is this question, consumers facing choices between building bears or filling up their gas tank. Now,
yes,
I think probably going for one more than the other at this stage in this current economic climate, but just walk us through Build-A-Bear.
So Build-A-Bear struck me because, first of all, of the companies on my list, by the way, that's the most recent company. They were founded about 25 years ago, whereas Motorola 1928, as I said. What I thought is interesting about Build-A-Bear is that they managed to transform their business model from being primarily a place where you drove to the local mall, went to the Build-A-Bear store, and then built your bear, to actually realizing that malls were, for the most part, a dying real estate breed. So what they did was they completely transformed their company by allowing customers to find Build-A-Bear where the customers were. That might be cruise ships, that might be parties, that might be other stores. So for example, I work a few blocks away from FAO Schwartz. Now, FAO Schwartz, of course, has all kinds of toys, all kinds of gadgets for all kinds of kids of all kinds of ages. They also have on the ground floor a separate Build-A-Bear area. So Build-A-Bear has an agreement with stores like FAO Schwartz to operate within. And I went there in April, and the place was bedlam. It was sheer chaos. And I interviewed a few people, and it was really touching as it wasn't just little kids. They were teenagers, they were adults. There was a young couple in their 20s who were celebrating their one-year anniversary, and he was giving his girl a Build-A-Bear.
You know, it's fascinating in this sort of digital age how we're trying to go back to just those sort of traditional things that we grew up with as kids. I mean, simple pleasures, right? Build-A-Bear does come here to the New York Stock Exchange most years, and they sort of give away some of their products, and it's so nice to take it home and watch your kids sort of unwrap it and build their bear. So, yeah, I mean, talk about digital detox. I suppose part of your job as a stock picker as well is to kind of find bargains in this market as well. I know you've looked at one company that now trades at about 7 times forward earnings versus 15 historically. Not a name we talk about very often, but one we're all familiar with, and that's ADT.
ADT, so ADT goes back even farther. It goes back to 1874. And what's interesting about ADT is that they've made a transformation sort of more internally, right? So they're still selling. They've got about 6.1 million subscribers to their ADT sort of whole house security system where, gosh forbid, if a burglar or something more dangerous comes into your home, not only will, various alarms go off, but the local police and fire department will be alerted. But they generate crazy free cash flow, right? They generate like 50% free cash flow. They just increased their guidance for 20% year-over-year growth in free cash flow, and yet they're still only trading at 7 times. So I think it's actually a real bargain.
Mm-hmm. And anything else on your radar here? Because I see that you are looking at companies that are specialized in quite a range of products here, everything from phones, dental implants to golf clubs. I think these companies are really interesting because they touch so many different people. How do you find those kind of companies like your Carpenter Technologies?
So, well, Carpenter Technologies is also a great story. It also goes back to the 19th century, 1889. So they are a high-tech smelter. They make the alloys that are used in your laptop, your watch, helicopter blades, jet engines. They supply the Department of Defense, Boeing, Airbus, and yes, they do dental implants and they do golf clubs. How do I find them? I read a lot of research. I certainly do my stock screens. I think in this particular case, there was a piece I was reading about rare metals. And that got me thinking about, well, rare metals are interesting, but what happens to the rare metals once we mine the metals? And Carpenter Technology popped up on my screen. Amazing, amazing company. The stock has gone up 20% since I published it 3 weeks ago.
Interesting. You just hope that the golf clubs aren't associated with the dental implants.
Well, one could argue that maybe for Carpenter Technology, the more people, misfire their golf clubs.
We don't want to see that happen. But thank you so much for dropping by. Really appreciate it, as always. Now I've got shivers. Stop Tango there. Stop Big Friday for Barron's Investor Circle.
Flirting, please.
Back over to you in Chicago for now. What's next?
Sam, Todd just highlighted my biggest fear with my 8-year-old daughter learning golf and hopefully not ever needing a dental implant. But coming up next, we are going to discuss what our guest calls the AI ROI reckoning and how gaining returns on AI is becoming both a challenge and an opportunity for businesses. Market on Close. We'll be right back.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Welcome back to Market on Close. I'm Marley Caden alongside Sam Bottis in New York. Kava is outperforming the market today after announcing it plans to hire more than 2,500 new team members this year. The announcement comes as part of the fast casual chain's Flavor Your Future platform that aims to build meaningful, long-term careers in Mediterranean hospitality. Kava said it expects to open more than 75 new restaurants this year as well. Let's check in with some of these fast casual names today. Of course, Kava having a nice day, up 3% here. Chipotle also higher on the day, 1.33%. Sweet Green making a nice run to the upside, more than 7.5%. This after they released a new menu, and Shake Shack also about 1.33% higher on the day. A good day for these fast casual names, particularly for Kava Group and Sweet Green as well. Do you want to shift gears here though? Welcome Sam back into the conversation and bring in our next guest who's joining her on the floor of the NYSE. Joining us now, Alex Buzzari, the co-founder and CEO of DDN. Alex, it's great to have you on the show with us. Thank you for joining us. Before we dive into AI and the increasing importance of ROI on these AI investments, could you just tell our viewers a little bit about what it is that DDN does and also your long-term partnership with NVIDIA?
Sure. So DDN has developed a data intelligence layer that ensures that GPUs and any kind of AI compute runs at the highest level of productivity, efficiency, and profitability. So we're the data engine that powers NVIDIA internally, XAI across 200,000 GPUs, 7 of the largest, most significant AI factories in the world, sovereign nations, enterprises. So if somebody has an AI initiative, which they want to generate value out of, business value, financial value, we're the data engine that makes that happen. In order to do AI, you need compute, which NVIDIA provides, and you need data, which DDN provides. The combination of the two accelerates the adoption of AI and the value creation from AI.
And obviously everyone is looking for the ROI. You called it the reckoning and ROI maxing, which I really like because that's kind of the new terminology that everybody's using right now. You say it's becoming a defining challenge, but also an opportunity. So what are you seeing right now?
Absolutely. So the defining challenge and the opportunity, the AI economy is now divided in two very distinct camps. You have the ones whose GPUs are running and are running efficiently and productively, and you have the ones whose GPUs are sitting idle. The ones whose GPUs are sitting idle are not benefiting from AI, they're losing money, and those AI initiatives will not go anywhere. The ones who are using the right partners, the right technologies, NVIDIA, DDN, and are maximizing the output coming out of that compute and out of the data are benefiting from it. So that's really the divide. The ROI is all about, are you using the right tools? Are you using the right technologies in order to benefit from it?
Names that you view are using them correctly, are we at a point where we're actually seeing AI generate measurable productivity gains yet, or are we still at a point where companies are struggling to connect AI spending to real business results?
Sure, that's a great question. You know, people have been saying lately that the SaaS world, software companies, is dead. Salesforce is using our technology, and with our technology, they're able to shrink their training by 40%. That results in 70% better value creation, and all of a sudden an ROI that did not make sense is making sense. So the SaaS world is not dead. The SaaS world is reinventing itself, and those innovative companies that are actually using AI in order to deliver better productivity are penciling out an ROI that makes sense. So think of it as earnings per share equals how well are you using your AI infrastructure, and that's what DDN delivers. I could give you many examples in financial services, better models that are resulting in better returns for investments, autonomous driving, getting cars on road safely without drivers, life sciences and pharmaceuticals, being able to bring drugs to market faster, more efficiently, with a better likelihood of getting FDA approval. But absolutely, it's happening. We have 85 customers out of the Fortune 500 that are using AI with the benefits of DDN in order to achieve productive and profitable initiatives.
But I mean, the money that is being spent right now, Alex, I mean, it's just eye-watering. I mean, you know, you've got like, what, 4 companies spending, what, $700 billion just this year. I mean, I was listening to David Solomon from Goldman Sachs last week, who basically said there is so much liquidity in the system right now, as long as people stay optimistic. I mean, he said there's more greed than fear, but it can flip on a dime, as we know. And he was sort of responding to Google Alphabet tapping the equity market last week for what, another $80 billion? I mean, how much money do they need? I mean, when you think about
it's a good point.
Astronomical sums here,
Marley's mad.
See the return on all of that investment.
Sure. So my take on it is those organizations,
Marley's mad.
Base that is global in nature. I mean, the ones who are making the massive investments are the ones who have products and services that are being deployed and used by hundreds of millions or billions of people. And so you say the monetization of that is fairly natural. You're investing tens of billions of dollars in CapEx. You're translating that into software services that are generating revenue profitably. I think that math works. For enterprises, I think what's really important is you have to adopt the right technologies, and you have to take an ROI view to that. Do not just embark on an AI initiative simply because everybody else is doing it. Look at, is that AI initiative going to deliver productivity gains, will deliver a better return than what I'm doing elsewhere? And again, we have customers who have deployed $50 million in an AI cluster. We lower the cost of that by 40% because their GPUs were just idle. So we give back $20 million on that $50 million investment. And that translates into an ROI that works out. So my word of caution is don't do AI because everybody else is doing AI. Don't do AI with the wrong partners. Do AI with those people who are really focused on delivering better returns to you, to your organization, as opposed to benefiting themselves. But I believe that this will continue, the trend will continue. I think enterprises need to be cautious and work with those partners who are delivering value.
Alex, I think Sam and I could probably pick your brain for the next hour if we were given the opportunity to, but we're sadly going to have to leave it there. But really appreciate you joining us today to take a closer look at the work you're doing with DDN, and also for this ROI discussion that's ongoing in the AI race. That was Alex Buzzari, co-founder and CEO of DDN. Coming up, we've got Options Corner. Rick Ducat, of course, will join us here in our Chicago studio to discuss the options action in applied materials after the company announced its quarterly dividend. That's next on Market on Close.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
Welcome back to Market on Close. Applied Materials is little changed today, but hit an all-time high earlier in the session after announcing a 53-cent quarterly dividend payable September 10th. Applied Materials has been one of the biggest winner of this year's tech rally, with shares up more than 90% in 2026 and 190% in the last 52 weeks. Of course, that means it is time for Options Corner. Joining us here, Rick Ducat, our lead market technician, to take a closer look at AMAT. And when we talk about Applied Materials, I already highlighted its performance so far year to date. I know it's outperforming, but how much so, Rick?
Yeah, pretty darn strong, outperforming the SMH semiconductor ETF. So we have AMAT here plus 187%, SMH plus 125, XLK plus 49%. But when we look more specifically, you know, AMAT kind of is this picks and shovels type play for the semiconductor industry, but also it's this very kind of high-flying field lately of photonics, which involves any kind of optical devices or fiber optic cables or anything like that. So some of these names like Lumentum, which is you know, just joining some of these major indices here, have seen a very big haircut recently. Also Air Test Systems and Ciena, but AMAT actually seems to have held up far better than many of the other groups in, or names in this group here, perhaps because it's less exposed to this photonics field. They do a lot of other things at the same time here. So an interesting subset of this sector to be sure.
Yeah, and as we look at AMAT on its own, I mentioned that it did hit a 52-week high today, but has really pulled back from those levels. I mean, it was as high as 525. Right now, we're about 488 and some change, down just a little less than 1%. But what are you seeing in terms of the technical setup here?
Right, so a strong rally recently. You know, the reason everyone cares so much about photonics is that AI data centers and infrastructure needs these fiber optic cables for the very high speed, very low latency transfer of data that they provide here. So AMAT has enjoyed some of that exposure as well. We hit our highs, 525.98 recently. We were most
So, for what it's worth, the trajectory looks like it's in analysts cover the stock, average is around $60, and the price seems to be following that average, which is moving higher over time. And the reason I bring this up, it's the case for all stocks in the long run that earnings and revenues need a match price. I will say this, that I've not watched Qualcomm after its big run-up over the past month or so, but one of the things I noticed about Qualcomm is that top-line sales and EPS growth estimates aren't moving higher alongside price. And what have we seen? We've seen Qualcomm, as an example, pull back quite significantly after it had a major run-up over the last 2 months.
Oh, yes, absolutely. Certainly a name that we've been watching very closely. What was it? NVIDIA CEO Jensen Huang made some comments about that company as well in just recent days. George, really appreciate it. Thanks so much for breaking down the details on Vico today, up 9% right now. Marley, I'll send things back over to you in Chicago.
Thanks so much to Sam and George for that one. We are nearing the end of our market session. Alex Coffey will be joining us to break down the action we saw today. That's all next on Market on Close.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Hey, Pop. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time
We're back here on Market on Close. I'm Sam Bardas on the floor of the New York Stock Exchange alongside Marley Caden over in our Chicago headquarters. We've just got a few minutes left in today's session. Let's welcome in Alex Coffey, co-host of Next Gen Investing, to help close out the day here. I'm just looking at the advanced declines at the NYSE, Alex, right now. We've got more stocks up than down, which tells you a lot about some of the rotation in this market. Just walk us through your thoughts of the levels you're watching into the close.
Yeah, I mean, clearly the market's turned around significantly today, guys, but when you look at the performance intraday, it's been consistent that more names in the S&P 500 have been green on today's session than red. Even at the lows, it was something like 55-60% of the S&P 500 companies were higher. That number is closer to 75% of names today, which is interesting because if you recall yesterday, only like a third of the names were higher on the session, even though we were higher on the day. So even now, we're red on today's session, and green names are outpacing red names by a margin of almost 3-to-1. So this rotation out of high beta momentum into, let's call it, lower beta consumer staples, maybe an uncorrelated trade in the likes of healthcare continues to happen. But today it was really tech weakness and everything else.
Yeah, and Alex, as you look, sort of across the sectors that are performing well today, it was a lot of the cyclical names. You mentioned financials there. We saw industrials, real estate. We got some good housing data this morning. How are you looking at that about the sector performance today?
Yeah, it's something that one of our guests that we have on Next Gen every couple weeks, his name's Ryan Dietrich. He's from Carson Group. I think he's a really smart guy, but he's pointed this out for several months now, which is everyone's downbeat on the economy, but there's a lot of signs that even if there is inflation, it might be something that's a little bit more like inflationary growth. And you see that in the earnings, you've seen that in the recent job figures, and of course you started to see it in the market's performance as well over the last several months. However, it's been so AI-centric in terms of where investment is. His firm still really likes tech, but they also like areas like financials and industrials, and I threw real estate in there today since it was the best performing sector, but these are areas of the market that do well when the economy does well. And if jobs hang in there and earnings are strong, and you compare that with inflation, yes, that maybe is continuing to go up, but is outpaced by wages and outpaced by earnings, that's an okay environment for stocks, particularly the cyclical areas.
And Alex, just very quickly here with just less than 90 seconds to go, I mean, what's different about the Friday tech sell-off was that you had higher yields and kind of like higher oil really pressuring stocks, but today you've got oil sub 90 bucks and yields are kind of hanging in there. It seems to be basically just some more positioning unwinding that I guess wasn't done last week and makes it look like yesterday was just a weak bounce. What are you seeing from a technicals perspective?
Well, today's Tuesday. I wish everybody a great night.
The yield
Be safe.
And the oil story.
Boom. Goodbye, young man. Later dates.